Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is Wednesday, December 10th, FOMC Day. FOMC Day. Today is the day where we figure out if the Federal Reserve in the United States of America is going to be cutting rates or not. We will be seeing at around 2 p.m. Eastern. I'll be live at 2:20, so 2 p.m. Eastern, we will find out if the Fed is going to cut rates. The FOMC meeting will be starting at 2:30, again, all Eastern. And currently right now, I promise I didn't do that on purpose. I haven't said that in a minute, though. It hasn't been as free-flowing off the tongue in a while. But currently right now, I miss saying it. Sometimes these phrases kind of fade away, but we got to bring it back. Currently, right now, 89.6% chance. 89.6% chance. We're likely going to get the rate cut. I mean, there is a 10.4% chance that Powell doesn't give it to us. But I think we're going to get it. And now the question is just, is the market going to react positively or negatively? And I don't know, dude. I have a feeling that we're going to get a little bit of a rip. But then again, I also have a feeling that's like, market's going to see the news. Powell's going to be hawkish. Market's just not going to be happy about it. Tom Lee came out this morning and he said that a hawkish cut is already priced in. So end of year rally to around 7,300 is set in place regardless of a hawkish sentiment around the cut today, which I think he's right about that. But then again, we're going to have to really see how the market interprets it today. And we'll know in a few hours what ends up happening. But there is about a 90% chance that we're going to get that rate cut here today. So we got a lot to talk about. We got some Nvidia headlines. We got a big Palantir contract that came out last night. That's important to discuss. We have Trump with his economic speech in Pennsylvania yesterday. Some moments from that I think are relatively important to get into. SpaceX, big rumor going around that Elon has not officially denied yet of them going public in 2026 at a $1.5 trillion valuation, which is why Rocket Lab was pumping yesterday. Are they still pumping in the pre-market? Rocket Lab right here was at 55 yesterday. After hours, Rocket Lab 54. I mean, pretty exciting if you could get something like SpaceX going public, because Rocket Lab, ASTS, they're going to be seen as simply plays, Redwire, etc. And so we'll talk about that and what implications that has on space. And then we'll keep going from there. And then you got these China updates with Nvidia. You know how yesterday the headline was that, Nvidia is saying, yes, we can sell to China because Trump is now giving us the export controls and lifting those restrictions, at least for the H200. China came out and said, we don't want your chips. This morning, you had a bunch of Chinese tech companies say, can we actually, get a little bit of that NVIDIA H200? And I think maybe that could create a bit of a catalyst for NVIDIA today. Now that you have Tencent, Alibaba coming out saying, hey, we wouldn't mind getting some of those H200s. And as a result, that could create some momentum for the broader chip sector in general. So that's what we got. A lot to talk about. Thank you, everybody, for being here. I am feeling a bit better. Still not 100%. It hasn't been sneezing over the past couple of days. This morning, it was a lot of sneezing, so I hope it's not too bad throughout the show. It was more sniffling over the past couple of days. So the sniffling is kind of stopping, but the sneezing is there. And I don't know what's going on with my throat, but it's still kind of hurting. So I don't think it's a crazy infection or anything. I've just been trying to get enough sleep to get rid of everything, at least in terms of the feeling of being sick. But I don't have a fever, anything like that. So I don't know. I think we'll be okay. Yeah, I'm definitely still congested, 100%. Definitely still congested. I had a busy day yesterday. My day didn't end until 11:30 last night. There was a lot of different things to get done, so I just kind of ended up sleeping late again. So I think just getting a good night of sleep will hopefully help this as well. Blame your dentist. All right, let's get into it. Also, we got Oracle and Adobe today. So I'll be live with Neil, I think with Jose as well. But Oracle is going to be a big one, dude. And I've been debating taking an earnings trade on this one because I feel like it's going to pump, but I'm not going to do it because I just don't know enough about Oracle or their debt profile. I know their debt profile is not pretty with 40 billion of debt. So if they don't announce one of those OpenAI types of contracts that they announced last time in September, I don't know if Oracle's really going to pump. So I'm probably going to sit out on this one, but this is going to be a massive one for the AI earnings lifecycle. And so we'll get into Adobe and Oracle today after the bell, and we'll see what goes from there. All right, let's get started. Let's start off with Palantir. So yesterday night, Palantir actually pumped to $193. And it was pretty incredible. It didn't sustain that pump, and maybe it breaks out again today. Maybe it continues to stay around this range. But he did have some active buyers coming into Palantir. The reason for that was because they got a pretty big deal. $448 million strategic investment in the shipbuilding operating system, aka ShipOS, to accelerate the adoption of AI and autonomy technologies across the industrial base. This is something we've been talking about for a very long time, especially GoCarp. Shout out to him. He's been on the show multiple times over the past year, as we did like our Palantir Sunday morning sessions. And he's been saying the Navy is going to come through with a big, big check. And yesterday we got $450 million for 2 years, not 5 years, not 10 years, 2 years, $450 million for Palantir. Very, very exciting. Now, what is the point of this deal? At its core, Palantir is becoming the de facto operating system for the West and particularly for the United States government, which means every single sector of the government is finding new use cases to implement Palantir software in. In terms of this use case, it is for, as per the Secretary of the Navy, ShipOS is not just new software. It is a new way of doing business that puts Palantir's cutting-edge tools in the hands of decision makers at every level, giving them complete, accurate, and real-time feedback across the supply chain. This is how we turn America's technological edge into maritime industrial dominance and how we build a true golden age at sea. ShipOS will leverage Palantir software to bring modern best practices to see the complex, data-heavy environment of Navy shipbuilding. So this is pretty exciting because, again, we're seeing a massive level of infrastructure and software investments from the U.S. government. Number two, Palantir has already worked in the shipbuilding ecosystem for the past 5 years. For those that remember the Hyundai Heavy Industries contract, $45 million for 5 years, HHI. This was back in 2022. They got an extension from a 2020 partnership that they signed with them early on, and it all had to do with shipbuilding and using Foundry essentially as an operating system for the complex navigation of what it means to actually build a ship, take down a ship, ship a ship to a different country. There's a lot of different nuance to what it means to engage in shipbuilding, and it's a massive, massive industry, especially for the Navy. And now Palantir officially got this contract. So does this mean the stock is going to pump up back to 195 or back to 200? I mean, we're going to see. Last night it made an attempt for that. I think the more important, relevant thing about this is that, again, the bears on Palantir, particularly the Michael Burrys of the world, are annoyed at the valuation, and they're annoyed at, I guess, the CEO and how Carp acts or whatever. But they cannot deny the growth, right? Now, they can get annoyed that the valuation is too aggressive for the growth that they're getting. But then you have to look at the quality of growth, right? The second derivative of growth is what types of contracts are they getting? Because the sort of important analysis about this, and it was the important analysis back when the stock was $20 and they were getting similar deals like this, is that this is going to be sticky. This is going to be reoccurring. This is probably going to be upgraded to a much larger contract over the next 2 years if Palantir shows they can do a good job, which Palantir has constantly shown that if you give them the chance, they can prove that they can generate value. And this is going to be something that other countries that also need shipbuilding and their governments are going to be looking at and saying, hey, if Palantir can do it for the United States government, maybe they can do it for Ireland or Japan or all these other different nations that they're already working in the context of shipbuilding. So I just think that the reason the street's going to continue giving this a premium, or at least holding the premium where it is because the type of quality of revenue along with the rate of growth that, I mean, when you're getting a $450 million contract for 2 years, it's not going to be the easiest to start growing at, or start deaccelerating back to 20% when you're growing at 60%. That is why Palantir maintains this momentum. And that's why it's very exciting to see what we've got going on here. So very big deal for Palantir. This news broke yesterday after hours. Didn't make too much news last night, but I think it was a bit of a delayed reaction. We'll see. I mean, maybe the market, this thing got to 193. Now, maybe that was just some shenanigans with people buying it up and down, but maybe this thing does have a little bit of breakout as we open today. And then if it doesn't, then if it continues to stay at these levels, I'm fine with that as well. The fact that, we fell to 140 and we're back at 180 is not the worst thing for Palantir. So very exciting stuff, up about 1.68% of the pre-markets. And that is the update on Palantir. S&P 500 basically flat. You got Bitmine, that's up a little bit. Crypto and or Ethereum and Bitcoin, massive, massive day yesterday. Ethereum, right, they're still holding 3,300, and BTC is holding 92,000. It did get to 94,000 yesterday. Those candles haven't really been faded. I mean, both of these were at 3,100 and 90,000 yesterday. They got $2,000, $3,000 candles, and they didn't necessarily leave, even if they've gone down a little bit from their peak. And so that's nice to see for crypto, where the question is it pricing in the rate cut, or is it kind of front running the rate cut? And we'll talk more about the rate cut, but it is nice to see crypto start to participate a little bit after being stuck over the past couple of weeks. GE Vernova increased their buyback from $6 billion to $10 billion, which was massive, massive news. This is a $169 billion company. It's up 10% of the pre-market, and they increased their dividend. So you're getting a lot of momentum right here for some of these other AI names, especially in the energy space, that are just doing really shareholder-friendly things like increasing the dividend and buying back your stock. And that's why GEV is up 10% right here. Let's talk about NVIDIA, but real quick, the 10-year. So yes, this is also something that's not necessarily the best thing to see. 10 years at the highest level in about 5 months, 4.2. I think the credit market is basically saying we don't want a rate cut, which is counterintuitive to a lot of things that we've been hearing over the past couple of weeks. But maybe the credit market right here is saying, hey, we think there's an issue in Japan that potentially could affect the United States. And number two, inflation still might be an issue. Therefore, we can't easily say that a rate cut is going to be the best thing in the world. And this, what you're looking at right here, this 4.2% on the 10-year, given we were below 4% 4 weeks ago, this is why Powell will be hawkish. Yes, meeting's at 2:30. Meetings at 2:30 p.m. Eastern. This is likely why Powell will be hawkish, because at the end of the day, if he's super dovish and he's like, everything's great, we're cutting rates, things are okay, inflation is not a concern, the credit market's going to let him know maybe you can't be that dovish. Now, obviously, the stock market would love him to be that dovish. Trump would love him to be that dovish. Unfortunately, he's not going to be in that route because inflation still is a concern perceptually. In the data, inflation is not that big of a concern yet. I mean, like, given the data we've seen, I know we don't have October PPI, so maybe it is a big deal, but we're not going to get that data anytime soon. From what we're seeing, inflation is not ramping up that aggressively. So the question is just going to be how the credit market interprets this rate cut. They've probably interpreted that we're getting 25 bips. And then does the rising of the 10-year yield, aka people selling off bonds, does that actually affect the stock market in a negative way? Because one could argue that people are going to be selling off bonds and that money is going to be coming right into the market because they'd rather buy Nvidia versus hold on to a 10-year. It's not good for the US refinancing of debt because we need those yields to go down, but it could be good for the stock market. So we are going to see, but that is one thing that we definitely do have to care about. 2 p.m. is the decision. 2 p.m. is the decision. 2:30 is the conference call. So I'll be live at 2:20. I'll be live 10 minutes before, but 2 p.m. Eastern is the decision. And we're going to get a summary of economic projections as well. So we're going to get a dot plot, which is going to show how the Fed is thinking of rate cuts going into 2026. By the way, JPOW has 4 meetings left after this one. So if those meetings are not going to give us a rate cut, which so far the Fed futures are not really pricing in a rate cut until after May of 2026, then this is going to be his last rate cut. And this might be the last time we see JPOW actually give us a cut. And I'm sure you're going to have a lot of people betting on what he's going to say in this meeting, but this might be his last actual meeting where he ends up easing monetary policy. NVIDIA. So news this morning, China's reportedly called emergency meetings with Alibaba, ByteDance, and Tencent to size demand for NVIDIA's H200 AI chips. I think this could be the headline that really, really makes NVIDIA make a move today. Now, there's no way to guarantee that could happen, but the only reason NVIDIA fell yesterday was because there was all these bearish headlines that China came out and said, we don't want your chips. And now, obviously, China says one thing, they do the other. Now they're in meetings with a lot of their tech companies, not only about NVIDIA chips. The article goes on to report about how they're trying to size up, hey, can we give you enough Huawei chips? Maybe we buy 5% of NVIDIA chips. You can do the rest with the Huawei chips. I'm sure the Alibaba and the Tencent people are gonna be like, can we just get 100% of the NVIDIA chips? Can we just get the chips? Like, do we really have to keep playing this game? Like, we know the NVIDIA chips are better. And maybe there's a world in which the Chinese tech executives can convince the CCP to allow them to buy these NVIDIA chips. And if so, that's just more revenue for Jensen that has not been accounted for, which would be very, very bullish and I think probably help get the stock back into that 185 range. I mean, the China stuff really is a game changer simply for the idea that none of it is priced in. And there's already so much that is priced in from a domestic demand perspective that is already trading at 24, 25 times earnings, which is cheap in and of itself. If you get China in the mix and potentially we get down to like 23 times earnings, I think it becomes more obvious buy. There's also a new Chinese model called Kimi, and Kimi is number 21 on the App Store. You guys can download it if you're interested in it. It is a Chinese model, and the fun thing about this, yes, I know my phone has no battery. It never has battery. I said last night, is Taiwan a country? And look what happens. Sorry, I cannot provide this information. Please feel free to ask another question. And then I typed in Pooh Bear, and everyone knows, or some people might know about Pooh Bear. Okay, this time it's answering it. Yesterday, Z, so I said, does Z look like Pooh Bear? You're not allowed to talk about Pooh Bear in China because yeah, look, I'm sorry, I cannot answer that question. It's like illegal to compare Xi, who looks like Pooh Bear, to Pooh Bear, because like the Chinese government has outlawed it. So again, these Chinese models, like when you play around with it and you just see the automatic censorship on any of these questions, immediately, I think this is why the American models have to win and the American tech stack has to win, because this stuff cannot be the mainstream models that exist. Now, it's not like the American models are perfect. Obviously, there's issues with American models as well, but the sort of just like explicit censorship of certain topics like Taiwan, because the CCP doesn't want Chinese companies enforcing the ability for users to gain access to that information because they see it as propaganda, immediately lets you know why the American models have to win. So yeah, your boy is never going to China, dude. Your boy's never going to China. Like, look, I have a lot of respect for China, and I know a lot of people that have went to China. I'm sure a lot of you in the chat have traveled to China. I am just paranoid about China, because I've said a lot of shit on this show that is not like friendly about the CCP. Like if you really go through the catalog of like the 1,000 shows I've done over the past couple of years, I've said some shit about the CCP. And so I am genuinely afraid that if I step in that country, they have a record of me, and immediately I'm not on American soil anymore. I mean, at that point, it's Chinese laws. So like, I would love to visit China. There's a bunch of things in China I would love to see, but I'm actually paranoid based on me just being a public figure and saying stuff about them, that if I ever step foot, it would be ugly. So I don't think your boy's ever visiting China. But these models are not necessarily the most conducive to free speech. So we're really going to have to see how they end up getting trained. The point is they want more NVIDIA H200 chips, which is going to be hopefully overall bullish for NVIDIA. Go to North Korea instead. You'll be detained. Look, maybe it's not going to be that serious. I know, like, sometimes people say I'm exaggerating it, which I probably am. It's probably not that serious. Like, China's not North Korea, but still, dude, like, it's scary to just step in there, and maybe you never know what the CCP has on you. I mean, they have that social credit system. They have a little score on how good of a citizen you are. And maybe it wouldn't apply to me when I get there, but still, it is a bit more scary to me. Okay, Meta. We got a big deal for Meta. Meta plans price hike for its virtual reality devices. This is kind of bullish because you're tying it with the other piece of news that we had. Meta, right? Wow, Meta's down on this, huh? I thought Meta would be up right here. You're tying this with the metaverse news that came last week, which was that they were scaling back 30% of the workforce in the metaverse. That hasn't been confirmed by Meta, by the way. That was a Bloomberg rumor. So we don't officially know if it's confirmed, but that is something that came out. And now you have price hikes on their virtual reality products as per Business Insider. One could argue this could decrease demand for the price hike of its VR devices going into the holiday season. So that could be why it's kind of bearish. The other argument could be there's not that much demand, so you might as well increase the prices and try to get as much you can from the average order value on consumers. Meta right here, that's down about 1%, still up nicely from that 585 level that was at 2 weeks ago at 650, but it was also at 680 a couple of weeks ago as well. On top of that, you've got more EU lawsuits. So, I mean, again, there's not a bear case on Meta from the actual business outside of the where is the CapEx going to go. You have that avocado model that's rumored to be launching in Q1 of 2026. I think the overarching bear case on the company is just, or I guess the narrative is, does the street believe that the ROI from AI is going to happen? And if they don't believe that's going to happen, you know, that's where you get a bit more scared about where the stock can go. But these sort of idiosyncratic things about the metaverse and VR and, you know, scaling back some of their spend, like, I don't think that's going to make the biggest difference in the stock. The biggest difference is going to be, where does the company go from here in regards to AI spend? And we're going to see over the coming days how that ends up playing out. You got a Bloomberg headline right here. Mark Zuckerberg, months into building one of the priciest teams in technology history, is getting personally involved in day-to-day work and pivoting Meta's focus to an AI model it can make money off of. Yeah, that's basically the headline we had yesterday for avocado. And that's going to be Microsoft right there. Microsoft down 2%. I don't know if there's a headline there. We'll see in a second. Microsoft down about 1.75. That's essentially what we saw yesterday. Also, you've got some other quotes from this Bloomberg article right here. Meta is refining their new AI model using Alibaba's Qwen. Meta is developing a model codenamed Avocado, we talked about yesterday. Meta's Alexander Wang at times is frustrated by Zuckerberg's micromanagement. Huh. I mean, I could understand being frustrated by Zuck's micromanagement if he paid you $15 billion to be the chief AI scientist at the company. Nonetheless, if Alexander Wang is not really producing results, I can understand why Zuckerberg also wants to micromanage. But those are the quotes from this Bloomberg article. Maybe that's why the stock is down a little bit right here in the pre-markets. Alexander Wang was the founder of Scale AI that Zuck's paid $50 billion to buy 50% of their company, which I really don't know if that was the best use of shareholder capital. That was, I don't know. I guess we'll find out if that was the case, but maybe a little bit of beef that's going on there. Okay, so that's what we have access to on Meta. Doug says, admit the bear case on Meta is that they lose access to teenagers during the most formative, addictive years of social media. Yeah, I mean, the idea that Instagram and Facebook lose their popularity definitely could be a bear case for. I personally haven't seen that happen. I mean, every year we think Facebook and Instagram are dying out. They continue to show these user numbers grow higher. So yeah, that is an argument. And I mean, I think that's always been Sam Altman's critique of Meta, is that ChatGPT makes you feel good after you use it because it's like actually encouraging. And Facebook makes you feel like crap. Instagram makes you feel like crap, which is right. Like, just objectively, Instagram makes you feel like crap. And no matter how much self-confidence or self-esteem you have, when you're scrolling through Instagram and you're seeing all these other people living their life, doing things in their life that they're already creating like a perception around, and then you see the celebrities that pop up in your feed, you already feel bad about yourself because you're like, oh, I'm not doing as much as these people, or I'm not living the life that these people are living. But ChatGPT, when you're asking these personal questions and trying to grow and get better, learn a new skill, like intrinsically there's a different feeling right there that is substantially better. There's not this advertising machine that's trying to just sell you more dopamine. And like you feel like you're becoming a better human being. Like that is objectively true. The problem is Zucks has been trying to interpolate that feeling inside of Meta AI. And that just hasn't happened, because I don't know about you guys, but I don't use Meta AI to learn about a scale. I have been really loving GPT, by the way. I subscribed 2 weeks ago, and the $20 a month is well worth it. I mean, like, it really is. Like, it is becoming my go-to model again, and it's just good. It's really good. Someone says GPT glazes too much. GPT definitely glazes too much, but it glazes in a intellectual way. Like, if you're full of shit, it's going to tell you you're full of shit. It's going to really try to say it in a way that doesn't hurt your feelings, but eventually they will call you out on your bullshit. But if you're trying to just like learn something new or get better at something, it really is very encouraging. And I just have a way better time using that than using Instagram. SoFi headline, introducing the SoFi Smart Card, the best all-in-one account. SoFi right there, of course, dropping in the pre-market after that announcement. So what do we have on SoFi? Looks like they're introducing some cash back on this new card. Is this a credit card? I did buy more SoFi yesterday, below 27. I mean, I don't know, dude. I think this thing should be closer to 35. So I've been buying SoFi. I think it should be okay. The new SoFi Smart Card, earn rewards with 5% cash back at grocery stores. Okay. Earn high interest up to 4.3% API on savings. Grow your credit score with one-time payments, exclusively available with SoFi Plus. Get $1,000 in annual value with qualifying activities for only $10 a month. Okay. It's okay. It's not the 3% Robinhood credit card. And again, I bought SoFi yesterday. So like the only reason I'm comparing it is because, again, to pay $10 a month to get access to this, and it's not exactly the perks that a Hood credit card can give you. Again, it's going to have to compete with Robinhood, which is $5 a month, and you get 3% cash back on everything. I'm sure there will be some people that really adopt this type of card. The question is, how much is it going to contribute to the bottom line for SoFi? Regardless of that, I'm buying more SoFi, dude. I really do think you're probably going to get a move closer to 35. Maybe not by the end of the year. We'll see if we get that really big bull run. I think Hood, look, I don't say this often, but I think SoFi is a better buy than Hood right here. And the only reason for that is because Hood is now very close to its all-time highs. I mean, yesterday it was pushing 140. So do I think a Hood can get back to 150 by end of year? Yes, if we have like a monster bull run. But if that happens, SoFi should probably make a move closer to 35. And if it doesn't, then it is what it is. But I think it's a safer buy right here than Hood, simply because Hood has made a big move from 100 to 135. So I do think this one would not be crazy in the short term to get this. Members earn unlimited 5% cash back rewards at grocery stores and up to 4.3% APY on saving balances. Yeah, that is the new SoFi card, which is what they announced here. It's probably not on their website right now, but it probably came through for the email for a bunch of people as well. $10 a month is annoying though, dude. I've always been skeptical of SoFi's Plus program. It's $10 a month to get access to some of this stuff. I mean, it's cheap compared to other cards, but I don't know if it's going to lead to massive use growth. Palantir right there, up 1.3% in the pre-markets. UNH is flat. BMNR is flat. S&P is flat. Broadcom has earnings tomorrow, which is going to be really important as well. Nebius, that's down about 0.24. And then Iren down 0.56. I mean, pretty much everything's actually down in the pre-markets. You're not getting a massive move. iRobot, once again, is up 18%. The stock over the past couple of days has been up like 10, 20% every single day. Duolingo back above 200. That's green a little bit. Microsoft, I don't have a headline for why they're down 2%. But it looks like there's something for why they're down. Everything else is red. Oh, P-Lab, shout out to Stock Talk. This was another one of his picks. Photonics. By the way, we'll be live again. He has a new stock we'll be talking about at 12:30 on Twitter Spaces. Last week, Twitter Spaces bugged out and it didn't even work. So hopefully there's no issue today. But 12:30, I'll be live with him again and we'll be discussing a new stock. But Photronics, I think we did a Spaces on this a couple weeks ago, or at least we mentioned it. Good earnings. They beat on revenue, beat on EPS by about 10 to 15%. And that's why that stock is up about 20%. Okay, Trump. So Trump had a bunch of different things to say yesterday on the state of affordability and the economy. Here's a couple of those clips, and we'll discuss some of the stuff that he mentioned yesterday.
So they look at the camera and they say, this election is all about affordability. We're dealing with bad people. And the word affordability is the exact same thing. And I can't say affordability hoax because I agree the prices were too high. So I can't go to hoax because they'll misconstrue that. But they use the word affordability, and that's their only word. They say affordability. And everyone says, oh, that must mean Trump has high prices. No, our prices are coming down tremendously from the highest prices in the history of our country.
So that between that and the...
Okay, so that was part of what Trump said yesterday around affordability. He talked a lot about how Pennsylvania in particular has been starting to do very well. And that created some more momentum in the state of Pennsylvania, which is why he's been getting some more excitement. Another thing that he said, which I think the street was also, well, I don't know how the street is interpreting it. We'll see what the Supreme Court says about it, is his favorite word, which once again starts with a T.
When I said tariff, my favorite word is tariff. True, but then I got a lot of heat from the fake news when I said.
I think in a couple of weeks, we're going to see what the Supreme Court says. And if his favorite word continues to be tariff, or if the Supreme Court says, yeah, we're going to have to reverse a lot of that stuff. So again, I think the affordability argument around the Supreme Court or around the Trump administration is going to be a big thing going into 2026. Again, I think the bull case for 2026 is Fed is easing, hopefully that continues, and the AI trade is intact. For the Republicans to win the midterms, they're going to have to win this argument around affordability, because it seems like that is exactly what the Democrats are going after as in terms of their main message. And so I think more and more and more we will be hearing the administration make their case for why they are the most affordable. You know, the question is, will the American people believe that? And that's something we're going to have to see going into the next coming months. Our boy Cleo Fields, which is going to be taking over Nancy's position once she retires, looks like he loaded up on Netflix, folks. He bought it at a higher price than it is today. November 20th, he bought around 200 to 500 grand of Netflix. This has not been the best buy so far. Netflix is down from those levels. So, I mean, it does seem like you have a couple more politicians outside of Cleo Fields that also loaded up on Netflix. The thing about this here, and the reason why this is rather interesting, is because, I mean, look, this guy's in Congress. This guy probably has a little bit more access to information around if the deal is going to get done. Now, a lot of it might rest on Trump's shoulder on it, like if Paramount or Netflix is able to get Warner Brothers. But if he has a little bit of potential information that Netflix is definitely going to get Warner Brothers, you know, maybe that's why he ended up getting some of these shares. So he got this around November 20th. Again, he's been actively buying a lot of stocks. This guy is like legit in the markets buying stuff. He got Iren at like $10. He had Open Door before it like ran up. I think he got it like $2-3. So you do see him trading and potentially Netflix is going to be the next one that works out. Where is Netflix in the pre-market? So we got about 15 minutes until the market opens. Netflix right here. Yeah, still red. I don't know. I'm staying out of Netflix. I thought about it over the past couple of days after all this stuff happened over the weekend where Trump's going back and forth with all of them. I do think Netflix is going to end up getting this. Like my gut tells me Netflix gets that. Polymarket says it's going to be Paramount. There's like a 45% chance that Paramount gets it. I think Netflix ends up getting. I think it's just going to be a long process. And I don't know if I want to be part of that process. Okay, let's do a poll today. Red or green? What are we thinking? Obviously, the Fed meeting is really going to determine how this ends up playing out. But let's see what some people think as we get started. And by the way, we have the Q3 employment cost index, which we got about 10 minutes ago. Looks like that's up a little bit. So let's get that news real quick, and then we'll keep going from there.
What are the numbers?
The numbers are our third quarter employment cost index up 0.8%. That's a smidge lighter than the 0.9 we were expecting. And the last 3 quarters have been 0.9 from the last quarter 24, the first, second quarter this year. And as I said, this is the third quarter. And that would be the lightest going back to, well, you have to go back a ways, to the second quarter of 2021. It equaled where we were in the third quarter of last year. So it has been more on the elevated side. The all-time high was 1.3%, and that was in the, second quarter of 22. And everybody remembers it was the first half of 2022 where we had 9.1% inflation. So we do understand that is coming down somewhat. What isn't coming down, you hear those hoofs in the background, Joe? That's the vigilantes riding. We settled a 10-year last year at 457. Hey, I wouldn't be shocked if we get much closer to unchanged. We're hovering now at 420. Should we close anywhere 418 or higher? Those are 3-month high yield closes. If we look at,
and that would not be pretty. I mean, if we get anywhere near back to 450 on the 10-year, we might have a stock market run, but you're going to have the credit market screaming that they don't agree with what's going on. And so we're really going to have to see today. Again, I'll be live at 2:20, 2 p.m. We get the announcement Eastern Standard, 2:30 we get the FOMC meeting, and all of us will come together to watch every syllable that Jay Powell says and how it affects the broader market. We got a piece of breaking news right here. China's DeepSeek is set to announce a new AI model that used NVIDIA's Blackwell chips, which were smuggled into the country per the information. Not sure how credible that is, given it's the information, but we'll see if this is true. DeepSeek reportedly tapped chips installed into data centers in various countries, then dismantled those chips and shipped them to China. It's not unbelievable that happened because, at the end of the day, it's China. They find a way to smuggle plenty of things into the country. If they actually did train on Blackwell, and this is true, which, maybe it is true, I think it's another reason why we should just be able to sell chips into China. I mean, if they're going to get it anyway, we might as well get paid for it. If they're going to go through all the trouble of smuggling it, what, the US is going to crack down on these chips and somehow stop DeepSeek from coming out with a new model? It's no, you're just never going to fully get rid of that. At some point, you might as well just regulate it if they're finding a way to navigate. I think that's, Jensen probably feels this. He doesn't want to say it, but Jensen also is probably dude, Singapore, Malaysia, they're not necessarily enemies with China. They might find a way to smuggle those chips into the region. And at that point, we might as well just sell it. So I don't know. We're going to have to see. I mean, obviously the threats of national security are there, but if we're giving them the H200 and we're keeping the Blackwell, it's not like we're protecting national security. Yes, we're keeping a better chip than the Chinese, but the H200 is still a pretty damn good chip. I mean, it led to the first iterations of ChatGPT. So it's not like we're cutting off China cold turkey from AI. We're giving them AI infrastructure. We're just trying to seem like we're better by not giving them the best infrastructure. But at the end of the day, they're getting these models and they're going to be able to build on top of it. I don't know if the AI war is going to come down to the quality of chips and quality of intelligence versus just the ability to implement that intelligence at scale. Speaking of war, we have the Department of War. You had your boy Pete Hegseth come out yesterday and once again show that they are seriously embracing AI.
The future of American warfare is here, and it's spelled AI. As technologies advance, so do our adversaries. But here at the War Department, we are not sitting idly by. Under the leadership of President Trump, America will lead the charge on this technological transformation by revolutionizing the way we win. And that's why today we are unleashing GenAI.mil. This platform puts the world's most powerful frontier AI models, starting with Google Gemini, directly into the hands of every American warrior. At the click of a button, AI models on GenAI can be utilized to conduct deep research, format documents, and even analyze video or imagery at unprecedented speed. Building on the great work of Undersecretary Emil Michael and his team, we will continue to aggressively field the world's best technology to make our fighting force more lethal than ever before. And all of it is American-made. The possibilities with AI are endless. Now, let's get to work.
Whether you like him or not, this administration is seriously embracing AI. And that is good for all of us that are investing in these AI companies. Again, GE Vernova CEO says we're investing in robotics and AI, expanding productivity. They announced a $10 billion buyback up from $6 billion, increased their dividend. That's why GE Vernova is up 10% in the pre-market. And that stock is getting some momentum. Microsoft said they were going to spend $17 billion over the next 2 years, or I think 4 years, in India on AI infrastructure. Amazon this morning, $35 billion in India over the next 5 years. Amazon said its latest investment will focus on business expansion, AI capabilities, export growth, and job creation inside the region. So you've got a lot of these tech companies, once again, saying that they're going to invest more money into India. And, a lot of that ultimately is going to continue to fuel what we're seeing in the overall AI CapEx ecosystem. All right, here's the headline from yesterday that really got people talking. Elon Musk's SpaceX reportedly preparing for an IPO worth $1.5 trillion next year. Put in the chat if you think this is actually going to happen. Elon hasn't denied it yet. I'm taking the under on this. 1.5 trillion is a pretty big number. I don't think that happens next year. I could understand how it could happen next year if Elon thinks the market's hot and it's time to go public. But he's also talked so many times about being happy with SpaceX being private because he doesn't have to deal with the quarterly earnings call. Being public would be a whole different challenge. However, if the whole AI space data center argument continues to become stronger, Elon did repost something yesterday, quoting Sundar talking about space data centers. I mean, you're probably going to need a lot of money to make that happen. And, the only way to get that type of money, you probably could get in the private markets, but Elon's going to be, just any company would be more likely to tap the public markets versus the private markets because you're going to need a lot more liquidity to make it conducive for shareholders, right? It's hard to raise like $80 billion in the private markets at these valuations, which means you would need a pretty aggressive IPO. This would be the largest IPO in human history if it does happen. And I'm taking the under on it, but if it does, Rocket Lab is going to catch a massive bid next year because Rocket Lab is going to be seen as just like a sympathy play if you don't own SpaceX. Elon did do a new podcast yesterday. These were a couple clips from the podcast. Here was him talking about if he would have actually done Doge again, knowing what he knows now about the government.
Would you do Doge again, knowing what you know now?
The thing is, I think instead of doing Doge, I would have basically built, worked on my companies essentially. So, and the cars they wouldn't have been burning the cars.
You gave up a lot to do Doge.
Yeah. Like if you stop money going to going for political corruption, they will lash out big time. Mm-hmm. So they really want the money to keep flowing. So if you stop it from flowing, there's like a very strong reaction to stopping the money flowing.
After you were in DC for a while, did you become disillusioned with how it operates?
Well, I wouldn't say I was super illusioned to begin with. I guess it's just like you really want the least amount done by government possible.
So you got Elon explicitly saying he regrets his time at Doge. And again, I was a supporter of Doge. I thought it had a real chance to do well. But ultimately, you're seeing Elon realize that it's just really hard to deal with corruption in the government. So that was a pretty good podcast for Elon last night. Had a bunch of different things that he talked about, and one of those things was Doge. This was the clip that was going viral yesterday. I'm going to play a minute 50 of this around Gavin Baker, who's a tech investor, talking about data centers in space, getting a lot of people to think this is why SpaceX wants to go public.
Well, it's funny. In the data center, the racks are over a certain distance connected with fiber optics. And that just means a laser going through a cable. The only thing faster than a laser going through a fiber optic cable is a laser going through absolute vacuum. So if you can link these satellites in space together using lasers, you actually have a faster and more coherent network than in a data center on Earth, okay? For training, that's gonna take a long time, it's just because it's so big. But for inference, so let's think about the user experience. You know, when I asked Grok about you and it gave the nice answer, here's what happened. A radio wave traveled from my cell phone to a cell tower. Then it hit the base station, went into a fiber optic cable, went to some sort of metro aggregation facility in New York, probably within 10 blocks of here. There's a small little metro router that's routed those packets to a big XAI data center somewhere, okay? And then the computation was done and it came back over the same path. If the satellites can communicate directly with the phone, and Starlink has demonstrated direct-to-cell capability, you just go boom, boom. It's a much better, lower cost user experience. So in every way, data centers in space, from a first principles perspective, are superior to data centers on Earth.
Look, I don't know enough about data centers in space. You got a lot of questions in the chat. How do you maintain all the equipment from data centers in space? What's the max amount of watts a solar panel can absorb? I don't know. I don't have the answers to these questions. All I know is if Sundar and Elon and Bezos start seriously thinking about this, I mean, who knows? Maybe this becomes a growth spurt that gets the street a bit more excited about what could happen. And, maybe that definitely catches a bid for Rocket Lab. So we're going to have to see, but that is one of the things that's definitely very important and potentially could create a bid for the entire space industry long term. Nvidia just responded to that DeepSeek information article. They said we haven't received tips of phantom data centers, and the smuggling seems far-fetched. Nvidia says we haven't received tips of phantom data centers, and smuggling concerns seem far-fetched. Nvidia right there. I mean, you never know. Maybe Nvidia goes red today just based on these smuggling accusations of China getting Blackwell, because Trump's probably not going to be happy about that. But Nvidia trying to break through 185 as we have a minute until the market opens. All right, so in about 4 hours, we will have the FOMC meeting. Again, I'll be live at 2:20. I think we're going to have the head of Palantir's energy division, Matt Babin, also join the show at around 10:45. So we'll get to hear from him on this shipbuilding contract, $450 million over the past 2 years that Palantir got last night. We're going to see what happens with the FOMC. J-Pow hopefully getting ready to give us this rate cut. I think the biggest question is not if we're going to get this rate cut or not, even though there is a 10% chance that we don't get it, but rather is it priced in? And it's probably priced in. So then the question is, how does the market interpret it? Has the credit market interpreted it? We're getting awfully close towards the end of December. What does that mean for sort of the end of year momentum that could be happening or not happening? And so today we're going to hopefully get some answers to a lot of those questions and see how the market goes from there. All right, Wednesday, December 10th. Thank you, everybody, for being here. It is 9:30 a.m. and once again, the stock market is now open. All right, wake your ass up. Let's get into it. Nvidia actually opens green here. A lot of the market immediately goes red, including JP Morgan that had a nasty 5% decline yesterday. 185 on Nvidia, trying to hold on to that screen. Netflix goes red. Rocket Lab, no surprise that one's going red. That had a big move yesterday, but that one's down about 1%. Hoodie, 1.2%. That's down. SoFi, goodness gracious, 26.67. This one cannot catch a break, but that one's down 26.69, down about 0.6% on the day. Meta down 0.5%. Microsoft down a full 2%. I did not see the headline on Meta. If anyone has it, let me know, but I don't see anything crazy on Meta. Amcor, wow, 45.59. My goodness. This one not stopping. Look at that. Even holding the 40s, I think is incredible. Amcor right there, 45.34. That's up about 1.54% on the day. Reddit 237, almost pushing 240. Rubrik 92. They had a great earnings. Adobe, that's flat. IONQ, that's down about 3%. HIMS is expanding to the UK as per a press release this morning. That stock down about 1.7%. Oracle, they have earnings today after the bell. We'll be live covering it. CrowdStrike at 514. Tesla 445. Warner Brothers up almost 3%. Looks like the street's thinking this deal is going to get done. The more that gets closer to $30, the more the street thinks that someone is getting this deal. 29.06, that's up 2.81% on the day. Fix Comfort Systems, they just got into the S&P 500. That's up another 1.4%. Ares Management also got into the S&P 500. That's up a little bit on the day. Snowflake still getting hit after those earnings. I don't understand why Snowflake took that big of a decline, but they did. That's down about 1.3%. Oklo's down 3%. Costco's up a little bit. Bloom Energy down 3.4%. Costco's earnings tomorrow. MP Materials down 1.6%. Rivian down 0.37%. Whereas Palantir, we are at 184, up about 1.28% on the day. Wow. Photronics, 37%. My goodness. This is a small company. You know, it's only a $2 billion market cap. It was less than $2 billion this morning. So, I mean, if anyone got into this one, 40% on the day, absolutely incredible. That one is going green. Nvidia is still holding 185. Netflix at 96.67. Amcor is trying to go for 46. Palantir at 184. Microsoft at 481. SoFi 26.65. Robinhood 134.52. ASTS probably down with Rocket Lab. ASTS is down about 0.67%. BMNR, are we getting a move? We're down. That's likely because ETH is flat. Nothing too crazy on ETH. BMNR taking a hit by 1%. Meta also taking a hit by 1%. Not sure why that one's getting hit, but it is getting hit. Well, I mean, I guess that Bloomberg article highlighted some internal issues with Meta around their AI initiatives, and that could be an issue. S&P 682, we're red. TD Cowen names Amazon their top mega cap internet pick with a $300 target. You've got pretty much every firm now saying Amazon, not Meta, 285 to 300 across the board. They reaffirmed their buy rating, $300, top pick for 2026, 229 on Amazon. That's up a little bit on the day. Apple, 280, 277. We were at 287 last week. That one trying to get back to that 280 level. Robinhood right there at 134.25. S&P is 682. The Qs are also slightly red, 623. Down about 0.23% on the day. Again, I think a lot of price action is likely not going to be significant until we get JPOW. So, if you're trading this, you could be trading it, but I think a lot of the volume up or down is going to happen once JPOW delivers his decision, and more importantly, how he talks about that decision. Marvell, that's up 3% on the day. American Express reports U.S. consumer retail spending increased by 9% in parts of November. We've been getting a lot of good news around Black Friday, Cyber Monday, and the overall U.S. consumer, which is really, Lululemon is on Thursday, which is tomorrow. If Lulu crushes, I think you've got a decent challenge to the consumer's weak narrative. Lulu right there up about 1%. Because pretty much every other company in the retailer space, whether it's Best Buy, Burlington, Abercrombie, Urban Outfitters, et cetera, Five Below, which is like a dollar store type of company. The fact that they crushed earnings by 25%, it really is challenging, this consumer weak narrative. And so we're going to see what Lulu does tomorrow. Ethereum right there, 3,300, holding on to that level. Tesla trying to get back to 450. Warner Bros. Keeps going. Maybe the street really thinks this deal is happening. Question is, who do they think is going to be paying for this deal? 29.12, that's up 3.03% on the day for Warner Bros. Does anyone buy Warner Bros. At like 26, 27 just for the arbitrage? I was thinking of it, but it's also the risk of like the deal getting blocked completely and then the stock gets cut in half, because there's no reason it would be trading at $27 if it wasn't for this buyout offer. But that one's getting hit. AMD right there, 219. You do have a headline on AMD and Intel. Intel and AMD accused of failing to block chips in Russia missiles. Okay, that could be affecting Intel and AMD if their chips are being seen in Russian missiles. Not sure if that's correct, but that is the headline. Intel down about 3.3% right there. GameStop, not the best earnings. They beat on EPS, they missed on revenue, down 5%. So again, GameStop is in their rebuilding phase, and they've been rebuilding for a while, but it might continue to take some more time. GameStop around 21 is a good buy. You know, they have a lot of cash. They have a lot of cash. Question is, you know, does the cash keep them afloat at these levels? I got to go deeper in their earnings. I do think the trading card business has some potential, but ultimately you're going to have to see, you know, if that's what you want to bet on for this one. Wow, Amcor 46. Dude, Stock Talk and I mean, you know, when we were discussing Amcor at 30, he really did not expect 45 to 50 until mid 2026. You know, he was optimistic, but he felt it was going to take some time for this thing to really play out. This one in the past 3 weeks has played out. So if anyone sells here, I can't blame you. I'm holding out for 50 before I start trimming, which, you know, I think now that the company's being re-rated, now you're getting a lot more American onshore manufacturing, sentiment go positive. I think 50 is not that crazy. Obviously, the stock getting much closer to 50 also helps. But it does seem like 50 is not crazy. But if you want to take some profits, if you bought at 30 at 45, that's not horrible. I know he has sold some of his leaps that he has, or not leaps, but like, I think he has like February calls on this. But maybe 50 is in the play going into 2026. Meta right there, 648. Meta's still getting a hit. That's down about 1.35%. But again, it's weird that Amcor is pumping. Again, like a lot of these names that are pumping, the only reason they're pumping is, or the only reason they're alive is because of Nvidia. Like Amcor is helping packaging for semiconductors and manufacturing inside of a fab in Arizona for TSMC. TSMC's demand is, I mean, they have a lot of different customers, but Nvidia is a big part of it. By the way, I think their the TSM monthly metrics came out yesterday, and it was like 67 billion last month. Like just incredible, incredible growth. But it is very weird that a lot of these names are making a move, and Nvidia is not the name making a move, even though it's part of it. Amazon above 230. That is nice to see. I agree with TD Cohen and a lot of these other firms. I think this is a really strong pick going into 2026. I don't think Amazon disappoints in 2026. It's probably going to end the year unless we get, you know, a really big move over the next coming weeks. Relatively flat. Maybe you get 5 to 7% out of it. Maybe if it really breaks out to 260, you get that 10% move. But if not, it's going to definitely underperform the S&P 500. 2 years in a row of underperforming the S&P 500 with all the margin efficiencies and productivity gains on Amazon. I feel like it's unlikely. So we're going to see what happens with Amazon. But that one getting a nice 2% move right there, 231.50 as that one is up. Yes, we saw SoFi's 5% cashback offer. Decent offer. Stock's not really reflecting it right now. Again, I think SoFi's a buy here. I think Noto has some plan with the dilution, and maybe I'm too naive for trusting his intuition, but I don't know if you raise 1.5 billion and just let the stock falter. I think they're going to do something with the money. The question is it more loan originations? Is it an acquisition? No one knows. But hopefully in the coming days, we get a lot more information on that. Amcor still moving, 46.45. That's up 4% on the day. Nvidia, 184. S&P 500, 682. BMNR, that's down about 1.3. Then Palantir, there you go, getting a little bit of a boost right there. 187 now. Did hit 193 after hours yesterday. Off of that $450 million contract with the U.S. Navy for 2 years. And that was getting some more excitement. Rocket Lab, are we green? We are not green, but we're still holding 53 on Rocket Lab. Is Oracle a buy before earnings? Put in the chat if you think so. I feel like if you are fully okay with bag holding, which means you cannot cry if this thing dumps below 200, then yes. But the risk of it dumping below 200, if they say anything around their debt financing, around their lack of RPO growth outside of OpenAI, I think could take her down. So I will not be buying before earnings. I did think of it, but now granted, last time I didn't buy before earnings and it pumped to 350. But last time they didn't have $40 billion in debt, and they actually had positive free cash flow. For the next 5 years, they will have negative free cash flow because of all the debt. And so obviously, you know, things have changed, especially given their credit default swaps have also gone to the moon. So I think Oracle can really beat and raise and surprise if the stock is higher, but I think the risk to reward might not be the best right here. Amazon 231, Nvidia still red, just below 185. But she is trying. GEV, massive, massive move on GEV. If you own it, congrats. Wow, 718, 15% move. This stock is now up, I believe, 85% for the year. Never mind, 112% for the year. Talk about a bull market, bro. Talk about a bull market. $200 billion company was $100 billion, less than $100 billion in January. I mean, imagine just being heavily overweight GEV. That was your year. You didn't have to do anything. You didn't have to worry about the day-to-day. You didn't have to you just had to heavily allocate to one name. Ended up working out. And there's a lot of names like this. That's the beauty of a bull market. There's a lot, and this is happening for a reason. Like, it's not meme stock mania with GEV. Like, they increased the dividend, they increased the buyback by 60%. I mean, like, yeah, you can get the street that gets very excited when a company does shareholder-friendly things like that. Apple right there at 277, S&P at 682, Palantir still holding 186. Webull back above 10, or at least it touched $10 for the first time in a couple of weeks. Google at 316. I see Google making that move back into the mid 3 teens. AppLovin at 714. This was up from 525. Had a great opportunity a couple weeks ago. Grab at 512. PayPal at 60. Zeta at 19. That one holding on to that level. ServiceNow at 846, and then Nubank at 1656. Netflix, are we still red? Wow, 95.68. We are still red on Netflix. iRobot still up 31%. Are they getting acquired or something? Why does this thing pump every other day? And if they're getting acquired, is this pump just based on the rumor of this happening? It's like almost every other day you get this move, but then you get a downside move as well. Nebius, she's taking a dump. That's down 2.3. It was CoreWeave, which touched 90 yesterday for the first time in a couple of weeks. CoreWeave also taking a dump, down 5%. Iran is also taking a dump, down 3%. The data center names, they move with each other. They have zero level of sovereignty. One of them goes down, the others are like, all right, we're coming with you. They're very unified in that respect. Amcor, she's trying to push 47. Trying to push 47. VG, 52-week low. Dude, I have not bought VG yet because I don't fully understand oil and gas. If I buy this thing, it's literally just going to be because Matt and Chris really think this name's going to be a big winner. But again, their perspective is literally a decade from now. I mean, they've been very clear that this one's going to take time. So if I buy it, it's just going to be borrowing their conviction. But I do not have a position in this one. I do think stressing over the day-to-day on this one doesn't make much sense because, again, right now they have a lawsuit. There's not really many catalysts. And ultimately, the narrative of the stock is not the best. But it could be one of those buy and holds for the next decade. NVIDIA right there, 185. All right, NVIDIA going green. NVIDIA going green right here. I already tax loss harvested my Misty. That was about 2 weeks ago. I think they did a reverse split or something. Yeah, 36.12 on this one. I mean, look, MicroStrategy didn't work this year. It's just that simple. Some of the yield max ETFs worked on names that really did have amazing runs like Hood and Palantir and Nvidia, but MicroStrategy did not work this year. And, we've only got 20 days left to December. I doubt. I mean, maybe Bitcoin has a massive run, but it's going to be tough for MicroStrategy to work. So there's a lot of people that are heavy and misty for the income, which, I mean, look, at the end of the day, you got to ask yourself, is MicroStrategy and Bitcoin going to turn around anytime soon? If it doesn't, it begs the question of if that income is actually going to be able to be sustainable. And that's down to the market dynamics of Bitcoin. So I think it's going to be a broader question around how Bitcoin plays out. 91,949 on Biddy on the day. CoreWeave, what's going on with the data centers, dude? Why are they 5% down here? Amazon and Nvidia are up. Amcor is up. Data centers are down. You had some good news with Nebius yesterday, acquiring some more land. You had some good CoreWeave completion of convertible notes yesterday. That's why that one was also up 5%. I think you got a couple upgrades on Iran and Nebius as well. Still, these names incredibly volatile in the data center space. Hoodie right there, 134, just below 135, and then Microsoft. Why? Okay, why is I still don't see a Microsoft headline, but that's down almost 3%. Tom Lee did say that MicroStrategy is the most interesting stock the market should look at. But remember, Tom Lee's saying that because he thinks a lot of the banks are shorting MicroStrategy to get exposure to their hedge on Bitcoin. And because, they don't short Bitcoin itself, and IBIT doesn't have the options market that MicroStrategy has. I think that's why he's saying that this one's a much more interesting argument. Jeffrey says Microsoft has a tactical opportunity. We are bullish on Microsoft. They're still keeping their price target. I don't see any bad headlines. We did have an OpenAI piece of headline. OpenAI hired the CEO of Slack as their next chief revenue officer, which, I mean, I don't know if that's bearish for Microsoft, given they own a lot of OpenAI. I think that's kind of bullish for OpenAI. I mean, that's a pretty seasoned executive, 14 years at Salesforce as well, to scale their enterprise business. But maybe the market's like, hey, it's the CEO of Slack. We don't really think that's should be the best person to lead revenue for an AI company. Phototronics, 47%. My goodness, that's green. Microsoft down with the 17 billion of capex. Yeah, but that India news was yesterday. That's weird. If it's getting hit on this one. Okay, Nextdoor. Why is Nextdoor pumping? Your boy Eric Jackson. This is his next 100 bagger. He's had like 10 100 baggers in the past month and a half, which, I mean, look, I hope to be an amazing investor one day who can hopefully have a legacy of decent picks, but I am not talented enough to find 10 100 baggers over 2 months. I'm not that good. I'll admit it. I really am not that good. But he apparently finds one every week. And so this is his next 100 bagger. Nextdoor Holdings. It is up 33% today because of his tweets on it. And yeah, that's why you're getting your pump. So I don't know what his thesis is other than it's going to go up by 100x. So that's what you got. He says, Nextdoor at $2 today feels like a stock that has been misperformed for years. It's the most mispriced agentic AI platform of the 2020s. What happened to Opendoor? Wasn't this thing supposed to go to $82? Opendoor's down about 2.8%, $720 on the day as well. He likes everything with a door in it. I guess so. Nextdoor right there, that's up 30% on the day. MicroStrategy, that's down 2.4%. Netflix, that's down 1.6%. And SoFi, that's down 0.5%. I read that Bezos' ex-wife sold about 50 million shares this year. Based on that volume, that could suppress the price action for a long time if no buyers to show. Yeah, I mean, Bezos' wife has been selling a decent amount. So is Bezos. But I don't think the Amazon stuff is about the insider selling. I really do think it's about the narrative of these guys showing to the street they can inflect operating margins and generate more net income growth, because Amazon generates a ton of revenue. But obviously their margins are not the best because, you know, they're selling things with a 5.3% operating margin in their commerce business. Now their AWS margin is amazing, but AWS has been slowing down over the past couple of years outside of what they said 50 days ago, which is that they are re-accelerating, which you would think, okay, the stock should get re-rated. It did get re-rated, then it fell in November, and then it just hasn't really been able to get back. Although it is up from like that 220 range. So, you know, it's not completely in the gutter. But I think the robotic story on Amazon is the most exciting thing. And I don't even think that's that complicated to understand, which is why I think 2026, it could be a much easier name to hold on to. APLD is down with all the other data center names. Again, all of them took a hit this morning. That's why that's down. Do we have any data this morning outside of the Fed decision? The Bank of Canada left interest rates unchanged. So we had that happen about an hour ago. Yeah, we're not going to get too much data today. So 2 p.m. will be the biggest thing we see today. And then in a week, we're going to get the jobs data for November. And then January, we get CPI for December, as per what the BLS said yesterday. So we'll have more of those updates as we get into January. ASST, that's down about 5%. D-Wave down 1.3%. AVAV, they had earnings yesterday. Aero Environment, they're down 10%. They didn't miss on revenue. Not the biggest miss, but they did miss. That's down about 9.3%. Nike and ELF, these are names to watch out for. Nike up 1.6% if the tariffs do get reversed, which it looks like based on Trump's tweets, he is thinking more and more that the Supreme Court is going to reverse this stuff. And if it happens, you know, those could be sympathy plays that get the benefit, given that a lot of their stuff comes from China. Microsoft, right there, still down 2%. Then CoreWeave down 4.7%. Novo, that's pumping today. Novo, that's up 3.3%. Okay, that's green. Oracle's earnings are after the bell. I'll be live with Neil and I think Jose. And we'll see what happens there. 47.92 on Novo. That's up about 4.2%. Yeah, I'm not sure why CoreWeave's down. I don't see any headlines around the data centers other than they are incredibly, incredibly volatile. Silver, by the way, I mean, this thing is going crazy. So first of all, the price of silver, are we still above 60? We are still above 60. Gold is actually slightly red on the day. Silver is up. I mean, again, the only person I know in my life that was screaming silver was my uncle. And I definitely didn't take his advice. So I'm gonna have to hear a lot of shit from him every time silver goes up. I'm already hearing a lot of shit, but it is what it is. If your loved one tells you to buy something and you say, whatever, and it goes up a lot, you're going to have to hear some shit. But take a look at this. Physical silver-backed ETFs posted a 15 million ounce of net inflow in the first 4 days of last week, the second highest weekly total this year. Silver ETFs are now on track to attract their 10th monthly inflow this year. And the biggest silver ETF, SLV from BlackRock, saw nearly $1 billion in net inflows last week, exceeding intakes of the largest gold fund. So the commodities trade is screaming. Now, it's not necessarily bullish that commodities are going up and then bond yields are going up. It's kind of the bond market and the commodities market maybe saying, hey, we are not necessarily loving monetary policy. But nonetheless, you could also say it's more of an everything rally if the AI trade stays intact. And you might be getting some FOMO into silver. Not to mention COPEX, which is also the copper ETF for the copper miners, which is doing well. I had a couple calls on this. I sold this around 64, and then it dipped to like 58, and now it's back at 67. So this thing is also continuing to do well. That's up 1.3%. Copper, silver, and gold are just having a hell of a year, which is pretty incredible. My concern is that there's maybe too much FOMO getting into these trades. But then you also think about data centers. I mean, they need a lot of these commodities, in particular copper. So it's not crazy to imagine that there's going to be some outstanding demand that's going to be sustainable right there. Amazon 232, that's the high of day on Amazon. As that one continues to go green. Rivian, are we breaking 18 today? Wow, Rivian 2.3. Do you guys know Rivian was the largest IPO in 2021? It's kind of crazy. Kind of crazy. We let this thing go public at what, 130 billion or something? This thing was not worth 130 billion. I mean, 18 bucks though. That's up 2.6. And that's still going. Where's NEO? We haven't looked at NEO in a minute. Yeah, Caterpillar has been a great stock as well. NEO's still at $5. Dude, NEO was $5 back in 2020 when I bought it, which is kind of crazy. Caterpillar is one of the best performing dividend stocks this year. I mean, a lot of these dividend paying names actually ended up having a massive year. Caterpillar's up 67%. You've got a data center correlation with them as well. And that one's getting some love right there. There's been a bunch of these data center names that have really shown momentum. So Caterpillar's up 65% year to date. That's a dividend stock. Goldman Sachs up 52%. That's a dividend stock. JP Morgan up 25%, dividend stock. Dollar General, dividend paying stock. I don't even know these guys were up 67% year to date, but they are 67%. And then Franco-Nevada Corporation, that's up 67%. FNV, that's up 60. That's a dividend paying stock. And then Comfort Systems, which just got into the S&P 500, is up 130%. So really, this bull market was not Nvidia and Amazon. Amazon barely did anything. Nvidia's up 30%, which is nice. But you've got dividend stocks that are up double Nvidia for the year. Some of them triple Nvidia. And I think it's more a sign of a healthy bull market. They have a lot of these stocks participating in the momentum. GE Vernova still up 13% right here on the day. Do you think Robinhood would ever pay a dividend? I think eventually in the future, Robinhood might pay a dividend, but you're not buying Hood for the dividend. You're buying Hood for the capital appreciation. So, I mean, I would be quite worried if they start paying a dividend because they don't really need to. And the thing is, they're buying back their stock, which is a pseudo dividend because they're decreasing the share count and they're making sure that you own more of the company. But no, they don't need to. If they keep growing at 30, 40%, I mean, that growth is what I care more about, and them investing that capital versus them putting it into a dividend. Dell's down 1%. SMCI, Jason bought a little bit more SMCI yesterday. That's down 2%. Duolingo, that's down 1.3, but it's back above 200. Grab continues to be stuck. Again, I think we're really going to have to see what happens with the GoTo acquisition. There isn't much news to update on Grab. A lot of people have been asking for updates. There's just not any. If there were, I would cover it. Even Mike, I was talking with him yesterday. We both believe that this opportunity is still one of the best opportunities in the market, and 2026 is going to be a good year, especially from an emerging markets play. We did a benchmark that reiterated their $7 target yesterday. There's just not that many updates because I think the street's waiting for this GoTo stuff to be resolved. So Grab right there at 510, that's down about 1% as that one continues to get stuck. Google right there at 316, Uber at 86.90, that's down 2.4, and then Warner Brothers still moving. It is 50 cents away, or 70 cents away from 30, 3.6% green on the day right here. My goodness, this one really, the street's really thinking it's happening. Could Bill Ackman be buying Meta? Bill Ackman did say 2 weeks ago, a stock has finally got to the levels that we've been waiting for years to buy. I do think Meta is one of those names. A lot of people are saying it's Adobe, but Adobe's been red all year. So I don't think Ackman would have said that if it was Adobe. I think it's something that had a knee-jerk reaction based on the November deleveraging event. And I do think it is Meta. It's Netflix. Could you imagine if Ackman comes back to Netflix? I don't know, dude. Could you be a fund manager that lost $470 million on a stock, sold at the literal bottom, watched it 10x on you, and then buy it a little bit below its 10x all-time high? I mean, I don't know psychologically if that's easy to deal with. Because again, what if Netflix falls over the next coming years? I mean, does Ackman sell it again? It could be one of those things where just psychologically it tests you deeply. It's Oracle. I don't know if he's going to get into Oracle, dude. Oracle, some of these fund managers are trying to not necessarily be stuck in the AI debt ecosystem. Even though I think the debt is manageable. I don't think it's scary debt for Oracle. But the perception of it might be weird if they deeply go into it. He already has Amazon, so it wouldn't be Amazon because he already has that one. He still has the Nike call options, I think. He did get out of the Nike stock and just got into calls. Those calls aren't doing well, though. He has 3 years for them to work out. But, I mean, if anything, the calls, I think he bought them at 70 or 72. I don't think he got them in the low 60s. So this one still needs to outperform as well. SoFi, did we go green? SoFi went green. There you go, 26.87. All right, that one trying to get back up to that 27 level. Another report, Gemini's global visits doubled between August and November, while ChatGPT rose about 1% over the same period. There's a couple of headlines quoting the same figure yesterday. Gemini is growing, and it's growing massively. And so it makes sense that the traffic is growing. Now, granted, ChatGPT had a lot more traffic than Gemini over the past couple of years because ChatGPT existed, Gemini didn't. But you are seeing a lot more people get excited about Gemini. I really haven't been an avid Gemini user, to be honest. I mean, I've really just stayed on ChatGPT, so I've got to give it some time to experiment. But it is something that's been getting a lot more attention. By the way, Elon said this yesterday. We saw that news. Wow, SoFi making a move, trying to bust through 27. Waymo's now doing 450,000 paid trips every single week, up from 250,000 from April. Elon said yesterday, Waymo never really had a chance against Tesla. This will be obvious in hindsight. And this is off a report that Waymo's volume is, I guess, not as exciting as a lot of people think, because the data that's getting them to get these trips is not the type of quality of data from a foundation model perspective on the training that Tesla's working on. Now, granted, look, I think Tesla is going to do very well in the robotaxi race, but Waymo's doing 450,000 paid rides a week. Tesla's robotaxi is not at that level yet. So if Elon really over the next 5 years ends up like destroying Waymo, and he's right about it becoming obvious in hindsight, and Tesla's doing millions and millions of paid rides every single week. I mean, Uber's doing like billions per month. And he wins the entire market, that would be quite impressive. I think he's going to do well, but I think Waymo's also going to do well. Like, I think I don't know if it's going to be an 80-20 market share split. Unless the robotaxi is just that much better of an experience. And maybe it is. But right now, Waymo is actually getting people to where they need to go autonomously. Nebius right there, still down 3% of the day. GE Veranova holding on to that 15% move. That one's not stopping. Then Rocket Lab goes green. Rocket Lab, 54. 54 on Mr. Rocket Lab, up from 52. If you use FSD daily, you know he's right. I mean, look, FSD 14 is incredible. It's just robotaxis at scale have not manifested yet for Tesla. But I guess that's the bet, right? That's why he's getting $1 trillion compensation package to see if he can make that happen. Iren still down 3%. Rocket Lab 154. Amcor did touch 46.97. Hoodie at 135. I did see the new SoFi smart card. We talked about that in the morning. Potentially the reason maybe SoFi is getting a little bit of a bid right here. And Oracle stuck at 220. Okay, let's see what else we've got going on. Again, JPOW is going to be the big story of the day at 2 p.m. We will see what the Fed does. Fed futures probability still with a 89.6% chance. I mean, there is a world where they don't cut. I think it's very unlikely, but it's 9% like it was on the last meeting. Let's get some coverage on the Fed, and then we will keep going from there.
Because of the government shutdown, we're waiting really key jobs reports, but we do have enough data to have a pretty robust debate about just how much the labor market is softening. Remember, if the Fed thinks that the labor market is in danger, that's probably why they're cutting and why they might cut some more. So here's the recent data, where it stacks up, what they're going to be looking at. On the weaker data points, the argument for cuts, for softening, September's 4.4% unemployment rate. That was the highest level we saw in years. Not good. Also, yesterday we got the quits rate for October. Carl, you mentioned this live. It was notable because it was 1.8%. Low quits rate means people aren't confident that they're going to go out and get jobs. The ADP report, November, ADP's taken on more significance as we haven't gotten the official jobs data. That had a negative number on it, negative 32,000. On the other hand, for those that want to hold rates, they can point to the job openings data that we got yesterday. 7.7 million was an upside surprise. The jobless claims data, especially in late November, 3-year low. So fewer Americans filing for unemployment claims. And then the September jobs number, yes, it was a high unemployment number, but we also saw more than 100,000 jobs created. So I think this is going to be the core of the debate. We know inflation is kind of stuck around these levels and elevated. There's not much to chew on there. Yeah. But on jobs, it's really a question about how soft are we getting and should they make a bigger move?
It seems to be netting out, obviously, that the risks to the labor market have risen enough based on everything that the Fed messaging is implied that we're getting the cut today. And then if you convey data dependence, non-committal, we have a split Fed, we're not that far from neutral, all those things you're likely to hear afterward, then we do have the kind of double jobs data next week. That could sway, exactly where the outlook goes for next year in terms of rates. But I don't think they're going to pre-commit to very much. Okay. And, I do also think that you're down 175 basis points in Fed funds rate in 15 months. It's almost after today. It's after today. Yeah. It's almost never happened when you either were not in a recession or really not on the verge of a recession by any observable measure. So I do think they feel as if they've gotten us to a place where we can wait and see for a little while. Now, I don't think that means that the market is going to be surprised by some kind of hawkish bent. I think the market's going to have to digest the fact that we have conflicting data, therefore a conflicted committee. We're not that far from neutral. We're going to have to be grown-ups and deal with the data.
You didn't even mention stocks near all-time highs, going into a period of expected reacceleration and fiscal tailwinds.
I do think that part of it is relevant in terms of, the market is telling you this. Every economist and strategist is telling you this, that there are reasons to upgrade growth expectations going into next year. And if that's the case, then it should be a buffer, psychological buffer, a real world buffer against the idea that the Fed is going to be proven to be too tight. You also have longer term yields inching higher. They're real yields that are going up globally. So it's not about the U.S. bond market saying, oh no, we're inviting a reacceleration of inflation. It really isn't about that. It's much more about, growth could be up globally, and therefore real yields are going
talking
up.
about hikes in Australia.
Yes.
And Japan.
And almost all central banks are kind of getting to a point where they're not going to be doing as much.
But the setup is so different. The setup is that we have high yields. I mean, the 10-year at 4.2, even if the Fed were hawkish, I'm not sure that would be as big of a surprise as when they were hawkish last time.
That's right.
Around. But just to show you, so everyone's saying this is a divided Fed. I mean, the sort of chemistry and where people vote and how many dissents will be on the committee, that's the most interesting thing going into today as well, because we haven't seen this in a while. And we've been trying to figure out which voters stand where on cuts, because there's obviously been a lot of talk recently. So here's the best guess here. On cuts, we've heard New York Fed President Williams, he's come out, basically leaned toward that. Waller, I'd put in that camp as well. Sure. Myron, we know that. And we know that he will not jeopardize a cut by voting to cut double, as he has in the last two meetings in dissent. So I think count on them for a cut. Likely cut, I put in the likely position Powell, even though he hasn't spoken much since the last FOMC meeting. Bowman, I put there too. She's in contention for the next Fed job, and she's leaned toward cuts. Jefferson, who's the number 2 to Powell. And then question marks around Cook, Goolsbee, and Barr.
Yeah.
I think that, haven't exactly had enough of the public commentary. Barr might be leaning toward a hold. And then the no cuts, Susan Collins, voter, she's expressed that. That's what sent the market into a tizzy. Schmidt and Musalem have all expressed a little bit more concern about inflation, and that we're sort of neutral, which is their way of saying we don't
need
have
to do anymore. Yeah, no, exactly. Look, in the meeting, you often get kind of like a trade-off. Like, I'll vote for the cut today if the language says that we're kind of going on hold. So you don't know if it's going to translate into outright dissent. But I think it's the natural outgrowth of being at this moment when unemployment definitely leaking higher, but still low, and inflation not really coming down right away.
So again, that 10% probability is there based on some of the people that mentioned that are not going to vote for the cut, or that could vote for it if they know they're going to be holding into 2026 on the summary of economic projections with the dot plot. But the majority of the Fed officials look like they're going to be voting for this cut. Robin right there, 136.40, that one breaking out a little bit. SoFi back above 27, which is nice to see as well. That's up about 1% as we get into it. Meta recovering a little bit, but still down 1%. Rivian still below 18, and then Amazon holding 231 below 232. BM&R, she's really trying to see 40 again. Got to 39.95, 39.57 right here. This one is up 50% plus from the lows. So, if you take a swing at it when it was really getting hit in November, which it was tough. I mean, the narrative around crypto in general was pretty scary, but you are seeing a little bit more stabilization here as that one's getting some more momentum. Is Rock Lab up 40% from recent lows because of Neutron? Well, there was a headline yesterday around Neutron becoming much easier, or the pathway to Neutron's launch system becoming active in 2026 becoming much more likely. But I think it's also up just because this thing took a nasty decline from 75 down to 38. So a lot of these names, high quality companies, yes, they were expensive at the top, but and they're not anywhere near 75 again, like Rock Lab, but probably didn't deserve to get hit as badly as it did. So a lot of these names are recovering, even if they're not massively recovering. But if you got them at the lows, it's a pretty good deal. If you got Hood at 100 or Rock Lab at 38, even SoFi at 23, not a horrible deal. Amazon right there at 231. Amazon got down to like 215 during that time. Nebius got to like 79. Nebius right here, 93 on the day. What did people say on the poll? So I said rate cut or not. Yeah, pretty much matching the Fed probabilities, 90%. Now, JP Morgan was down yesterday because they warned of higher than expected expenses ahead and a more fragile consumer. It was pretty weird. They expected $105 billion of expenses next year instead of $100 billion, and you had a $900 billion bank fall by $50 billion. I mean, it goes to show how fragile the market is in terms of some of the expectations they have for these consumer-facing companies from 318 to 300. It happened in the middle of the day, just randomly, based on a quote at a conference. And I think that took SoFi down, took all the banks down, but I don't know if the market's going to care that deeply about those comments as being bearish for next year. Bank of America, that one's flat on the day. And Goldman Sachs, 877, that's also relatively flat. I know the day is far from over, but didn't JC say Etsy could make a move? Yeah, so Etsy is his pick of the week as of yesterday. And his idea is holiday sales, retailers already doing well, and then Etsy kind of being stuck in a range for a while could be the breakout on this one. I mean, I think of Etsy as a mini Shopify. It's obviously not as large or as big in terms of their volume as Shopify, which Shopify also got hit to like 140 back in November, back to 160 here. But maybe Etsy is potentially a sympathy play. Google does own 7% of SpaceX. So if if they really do IPO, Google going green at 1.5 trillion, I mean, Google's going to love that. Which again, I kind of doubt it's going to be 1.5 trillion, but if it does, that would be massive. So Elon owns 42% of SpaceX. Fidelity owns 10%. Founders Fund has 10%. Peter Thiel. Google has 7.4%. And then the other 30% of it is owned by others. They invested $900 million into SpaceX 10 years ago. It's now worth $50 billion. There's a 56x return on their SpaceX. So I mean, if this thing really were to go public, I mean, you're talking about a massive catalyst for 2026 for Google. This is what Tom Lee said today. Contrarian take. Today is the Fed day. Markets have been labored and struggling for the past 4 weeks. Nobody wants to be long stocks in front of a hawkish cut. To me, it seems to raise the probabilities that stocks rally post-Fed decision, which is contrarian, right? Because if we're going to get a hawkish cut, which pretty much everyone is assuming we're going to get this hawkish cut, you would think everyone's getting ready to sell the news, which means if everyone's getting ready to sell the news, maybe we don't sell the news. And that could lead to a little bit more momentum. Mercado Libre, this one's just been annoying over the past couple of months. That one's down another 5%. They're having some issues in their home country, particularly in forms of competition, margin decline. Stocks up 11% year to date, down another 5% today. Baba's up a little bit, but some of these international stocks have been taking a hit. Baba, that's up 2.48% on the day. Does anyone own SpaceX in their portfolio? I mean, we know our boy Sachin has this one. SpaceX is one of the most liquid secondary names, and it's been traded around for a long time. So I think there are more retail investors than not that do have access to this one. So this would be a pretty big event if it ends up going public. I do not own SpaceX. I had some opportunities last year to buy it, but I don't know, dude. At that valuation, I was also like, well, I could buy Hood at $20, you know? So I never ended up buying it, but for the people that have been in it for the past 5 years, it's done very well. BM&R right there, $39.50, and then SoFi still up 27. Wow, Netflix continues to get hit, $95.16. Lowest we've seen it in about a week. Okay, tokenized SpaceX. Yes, there is a way of that. Yeah, we talked about P-Lab this morning. That one's making a massive move. I mean, we'll be doing a Twitter Spaces with Stock Talk later today. We'll talk about his perspective on if it's still a buy, but 44%, massive, massive move. Very similar to Amcor. American onshore manufacturing theme is kind of the broader thematic for a lot of these names. And this one just crushed earnings. I mean, honestly, that's probably why Amcor is running today, because they're in the same niche, even though they're slightly different. So Amcor is probably catching a bid off that entire thematic going vertical. Shopify 160, Google at 318. Netflix is going through what Chipotle did after the split. You know, there is that conspiracy, which is backed by a lot of data. So maybe it's not a conspiracy, that every stock after it splits gets hurt pretty bad. It happened to Nvidia as well. I mean, literally Nvidia took like a 35% haircut. Now, granted, you had DeepSeek and all this, but still, every time you have a split, these stocks get hit. So maybe that's just continuing with Netflix. Netflix split like November 17th, I think, roundabout. Dude, Netflix at the top was like, what, 130? 134. $16 back in 2022, up to 134. they've completely gotten rid of most of their gains for this year. Trailing PE now on Netflix is 39. 39. It was at around 50, 54 a couple of weeks ago. Why is Nebius down? I have no idea. Dude, a lot of these data center names, you can't even give a reason for them. There's no dilution. There's no this. There's no that. I mean, why was it up to $100 yesterday? I don't know. I've been in some volatile names. These data center names are volatile. Like, I didn't realize how aggressively volatile these guys are, which makes the premiums amazing if you're selling options on them. But it also means you can easily get assigned up or down on these stocks. But I don't see a headline for Nebius here. Here's a quick update on Meta and part of the new model monetization strategy that we saw yesterday in terms of the headline.
With Meta typically is they hire, ex AI expert from Apple. They've hired up so much talent. You'd think that they have an insane bench and that things are going smoothly. Does this suggest that things are not going so smoothly with Meta and their development of their AI offering?
Well, in the first instance, when the story hit, there was a kind of strange algo spike and then drop in the shares, but we're now down 1.5%. So it's difficult to interpret the market's read on Meta shifting to closed model. What Kurt Wagner and Riley Griffin, our colleagues, are reporting is a lot of detail about the specific model, Avocado, which had originally been planned as an open model and according to sources may launch as a closed model. It's interesting in the technology development side because what Meta did was take models from others, including Alibaba's Gwen model, for example, and use that existing work to distill and prepare their own model. That's something that Frontier Labs do all the time. But it's not new, the idea that Meta might go from a very clear open source approach to closed. Mark Zuckerberg talked about it in July's earnings call, basically saying at some point, in an open source world, the models are so big and the resource requirements are so high. What's the point? Academics don't have the funds to work at that scale. And really, it's only relevant to private industry if you're working on a model that has that level of parameter and requirement.
Again, I think the fear of Meta is that outside of advertising, where is the AI ROI coming from? It's a legit argument to be discussed on Meta. It shouldn't be, because the business should be worth closer to $800 without this AI overhang. But Google had an AI overhang. Amazon had an AI overhang in terms of their cloud. I mean, these AI overhangs are very real. And until these companies prove that their CapEx is valuable for something outside of their core business, even if they're trading at an 18 forward PE, which I agree is pretty stupid, they end up getting hit. So really, that is going to be the question on what Avocado potentially could be doing. Yeah, Meta's Avocado, Google's Nano Banana, Apple should be Apple Carrots and Celery. That's hilarious. These code names are so weird. But like Google ended up, Nano Banana ended up becoming like a real name. As a millennial, I eat avocado toast. I've never had avocado toast. Is it good? I've never put avocado on toast. I like butter on toast. Like some butter on some warm, crunchy toast, but it can't be too crunchy. It has to be like a certain type of crunchy. But I've never done avocado on toast. Did everyone eat breakfast this morning? Are we eating breakfast right now? Or for those that it's night, are you eating dinner? I think I've legit gone 3 years without eating breakfast in the morning. At least when I have a show. When I have a show, I don't think I eat breakfast. It's been a long time since I ate something before the show. Like I can't even, after 3 years, I can't imagine eating something and then talking for 3 hours. Like I legit cannot imagine doing that. Palantir right there, 185. That's up 2%. And then ASTS, that's up 2%. Okay, Celsius is not a breakfast, Ray. These people that drink energy drinks for breakfast, you guys are crazy. Celsius for freaking breakfast. Red Bull for breakfast. You guys are wild, bro. That is not a breakfast. How do you even drink an energy? Like, look, I don't hate a good, nice, cold Red Bull sometimes, but in the morning, 9 a.m., downing a Red Bull? It's wild. Yeah, like coffee's better than that. Goodness gracious. I've been doing Red Bull for breakfast for a long time. All right, that's crazy. That's actually crazy. It's like legit crazy. Like in the morning is a bit aggressive. Dude, if I do go downstairs and like get a coffee, they have like free coffee. If I end up getting a coffee, I drink like 2 sips of it just to like have something hot in the morning, and I never end up drinking the whole thing. And I put a ton of cream in it just to like make it even drinkable, because I don't know, I thought I'd be able to drink black coffee. It's hard. I had it a year ago. I was like, oh, maybe I can drink black coffee. It's like, I just can't drink black coffee, dude. It's tough to drink it through. Amcor right there, 46. That's still up 3%. Photronics, 45%, continuing to make its move. And then Meta trying to recover at 650. The time of the rate cut announcement is at 2 p.m. 2 p.m. 2:20, I'll be live. Black coffee over ice is solid. Yeah, the same thing. The people that drink like cold black coffee in the morning, I don't know, dude. That's quite incredible. The only thing cold I can drink in the morning is like a latte. It's like it has to be like a caramel latte. But I don't even drink those anymore. I used to. A couple years ago, I used to like really enjoy that, but I kind of stopped back in 2024. So now I just drink nothing. Just drink water. Dude, some of these breakfasts. You can eat raw steak but can't drink coffee. It wasn't raw. It was rare. Definitely wasn't medium rare, but it was rare. GE Veranova still up 12%. Nvidia not getting a bid, 184. Not moving. Continues to be stuck at that 184 level. Take a look at this chart right here. Let's go through some of these macro charts that we have. 2 p.m. Eastern. 2 p.m. Eastern. We're going to get the announcement for the Fed decision. U.S. car affordability. The average price of a new car is now $50,000, according to a Kelley Blue Book. I remember paying $21,000 for my Honda Civic back in 2019. The Tesla was $41,000, but I had 0% APR. An average car now in the country is $50,000. The average new car loan amount is up to a record $41,000. Since the start of 2020, the average amount financed on a new vehicle has risen $9,000 or 28%. Total auto debt jumped $4 billion in October to an all-time high of $1.56 trillion. I mean, those subprime auto loans have been delinquent, the highest they've been since 2008. This is why Trump keeps talking about affordability, because you know the Democrats going into the midterms are going to be pointing to stats like this. And obviously, rightfully or wrongly, they're going to be blaming the current administration on the fact that it costs $50,000 to get a car. So, I mean, this is definitely going to be something that I think is going to be a much larger argument going into the new year. But 50 grand is aggressive, dude. Like, realistically, you've got to trade in your old car and hopefully get some cash just to kind of ease up the down payment on buying a new car. But it is aggressive. And that's why I was so quick to buy my Tesla, because once I saw 0% APR, I was like, okay, a Tesla giving you 0% APR is not going to happen that often. And obviously, Elon's trying to get his numbers up. I think this was Q4 of 2024. And so that's why I jumped on it. But it's hard to get a really decent interest rate and getting a car. Well, the used car market is also going, I mean, that's part of the reason why Carvana has been doing so well. Now, ironically, and I don't know the difference between CarMax and Carvana, I ended up selling my old Civic to CarMax. But CarMax is down 30% on the year. Carvana is up 140% on the year. I don't know how different Carvana is from CarMax. I imagine there's something different in the way that they actually finance the deals. And I think Carvana has more to do with the loans. CarMax maybe doesn't, but two business models that should be the same, completely different stock performances. Which begs the question, what the hell is Carvana doing that's different than CarMax? But both those stocks went the opposite direction. I make 6 figures a year and I still ride the public bus. Dude, I used the bus and the train for a long time. I mean, a long, long time. I didn't get my license till I was 21 because the day I had my test when I was in high school, I was at a debate tournament in California. And then it was a combination of me being lazy to not take the driver's test again for like 3 years. And I know it's like 3 years of laziness, but the real reason is because I think I was afraid of driving. Like I had this little fear of like driving and being on the road and just afraid of car crashes and stuff. And I don't know why, but there was something in me that made me afraid of it. But once I finally just like took some lessons and got my first car, like that fear went away pretty quickly. And then I started driving like 150 miles a day in this side job I was working at back in 2019. So it took me a while, but once I got it, I started driving. Got my license at 14 in Nebraska on a farm permit. They let you do that in Nebraska? Farm permit? That's crazy, dude. 14. No, I was legit scared. I was like legit. I don't know why. It was like an irrational fear. I don't know if. By the way, I forgot when you're sick how crazy the dreams are. Because the dreams I've been having over the past 2 days, even last night, dude. I mean, goodness. Last night I was kidnapped. I was legit kidnapped. And I woke up and I was just like, what is going on, bro? And then Sunday, I don't even want to remember the dreams I had on Sunday, but it was bad. I forgot, like when you're sick, at least when I've been sick historically, the dreams get bad. Yeah, it's the NyQuil kicking in, the Tylenol kicking in. It's just like, what are these dreams, bro? I don't know who kidnapped me, but someone kidnapped me and I was stuck. And it was just like, I don't know. The dreams are not the best. The dreams are not the best. I've been driving since I was 9 years old. Okay, I don't believe that. Driving since I was 9 years old. Get out of here. 9 years old. It's ridiculous. But if that's true, it's kind of crazy. It was Steve. Oh my gosh. Freaking Steve. Look at what he just texted me, bro. Someone probably gave this to him. He texted us like 10 minutes ago. Look at this. This guy must be so happy. Look at all these chocolates. If you were corporate, you know that you're probably, this is the time where you get a lot of gifts or you have to give a lot of gifts. And I know because when my mom used to work at a school, I mean, around December, there'd be just so many gifts that she would have to give out or that she would get. So if you were corporate, especially if you're at like a management position, you kind of have to give out gifts. It's kind of like rude if you don't, I guess. So he's probably going to get a ton of these chocolates. Is Nvidia dumping? Nvidia. Oh my goodness, she's going down. Why are they kidnapping Nvidia from being successful? Why can't they just let her breathe? Why are they doing this? Let's get an update on Nvidia and see what's going on with China. But Nvidia now below 184.
Still a lot of China hawks who I've spoken with on the Hill who are worried about the U.S. keeping its dominance in AI. Now, Republicans who I've spoke with, they avoided criticizing Trump directly, but it was clear they were worried about the impacts of this decision. Here's two of the senators I spoke with, Lindsey Graham and Josh Hawley.
Alarm bells go off in my head here. I don't know. I don't want to give them I don't mind doing normal business with China. But if you can prove to me this will accelerate their military capability, I'll oppose it.
But if we want to beat China, I think we need to constrain their ability to leverage our own technology. So I would think that we'd want to reduce their access to our hardware, not increase it.
Now, while there is still fierce opposition on the Hill, not all lawmakers see the H-20 going to China as a risk. I spoke yesterday with Senator Mike Rounds. He told me that he supports the sale in part because he believes it's important that developers in China and around the world build AI with those U.S. chips. And that's similar to the argument that NVIDIA's Jensen Huang made in his pitch to lawmakers when he was up on the Hill just last week, meeting with that group that oversees export controls. Several lawmakers also told me they are still working to find a path forward on export controls and other limits to try to ensure that the U.S. keeps its lead on AI. That could include things like tracking and chips. But guys, we'll just have to keep an eye on see exactly how much momentum this group is able to make, especially with the White House going in a different direction. Guys?
I wonder too, Emily, how you think it affects relationships with the Middle East, given that some of the China hawks have tried to theorize whether or not China would get some of these materials from the UAE, Qatar, or others in that region.
I mean, it's definitely something that lawmakers are cognizant of, Carl. I mean, when I speak with them, they do mention their relationships with the Middle East as far as them being a partner, as far as them getting some of these chips, as far as what their relationship is with China. It's another component here. And I think for a lot of lawmakers, they're still exactly figuring out where the U.S. stands in AI, what the best course of action is going forward. Certainly, everyone up here wants the U.S. to remain dominant, but there is a clear divide in what needs to be done to get there.
I think it's been challenging for every administration in recent history, and that the broader point, which is, what is China? Is it an adversary? And how do we treat it? Because clearly there's an interdependence we need. We saw that with the rare earth minerals and magnets in the trade deal, but it gets murky when you talk about chips, using them for militarization, because that has been the pattern that we've seen from China, even when we try to engage them in negotiations.
And Sarah, I mean, we're even seeing things, I mentioned that package that initially they had that chips a limit in that then got dropped. That package does also include other things that are kind of setting up a wall between the U.S. and China. Things like limiting certain investments in Chinese companies associated with the military, or limiting how American pharmaceutical companies can work in contract with Chinese counterparts. So there is still a strong sentiment up here on Capitol Hill that they need to be very, very wary when dealing with anything, particularly with the Chinese military or with advanced technology. But you are, of course, seeing the White House being more open to the argument put forward by NVIDIA and others.
Emily, thanks. We'll talk soon. Emily Wilkins in D.C. today.
Here's the question. If I was a reporter and I was asking Lindsey Graham and Josh Hawley about NVIDIA, and this is the real question. And I'm not saying it's the best question, but I think it's one of the more realistic questions that needs to be asked. Their argument is we might not want to give the chips to China. Okay, fair enough. If, hypothetically, you were to assume that NVIDIA stock were to fall dramatically, aka the value of the company, which I don't think is going to happen if they don't sell to China because they have plenty of demand. But let's say that were to be the case, that NVIDIA's future trajectory of growth was contingent upon their ability to continue selling into China. Every American 401k right now is dependent on NVIDIA. The American economy is dependent on NVIDIA. So I think the real question for these politicians is, are you willing to let NVIDIA be stagnant or fall by a significant percentage? Not a 50% drop, but maybe a 25, even 15% hit, and then stay there in the name of national security. Because the economic national security of this entire country, essentially relying on NVIDIA, is also something to consider. Now, there's a lot of nuance to that conversation. There's also a lot of pushback you could have to that argument that, well, even if NVIDIA falls 15%, the American economy will be fine, all that stuff. But it is an argument. And I think Trump is learning more and more that NVIDIA needs to be able to win, because whatever mess we've gotten ourselves into with this AI revolution over the last 3 years, it has led to this stock being at the center of everything, which is probably not the healthiest, but nonetheless, this is what we've got. And so, I don't know, I think there is an argument that NVIDIA needs to sustain itself and continue to do well for the American economy to continue. Again, 50% of GDP since 2023 has been CapEx. That CapEx doesn't happen unless you have NVIDIA. There is no American economic growth over the past couple of years unless you have NVIDIA. So I don't feel like we're being hyperbolic to overstate the importance of it. But there is an argument that, at the end of the day, if China develops militaristic AI using NVIDIA chips, then that's not the best for national security. So I think there's two things going back and forth here as we analyze it. Yeah, I'll be having Matt Babin come on the stream in about 10 minutes. He is the head of energy and natural resources at Palantir. So he'll be on to talk about this ship OS deal with the Navy, and we'll get his perspective as well. Also, I uploaded a video last night. That video includes the NVIDIA interview that I did at Palantir's December event. So if you watch the first 15 minutes of that interview, you'll see the 15 minutes of that hour-long video. It's the Palantir and NVIDIA spokespeople speaking about their partnership. And yeah, I think it was pretty cool. Chain reaction. Palantir is now entering into the data center space. Data centers are growing massively. Software is needed to make those data centers work. And so it does seem like that is going to be a really strong partnership over the next coming weeks. 134.95 right here on hoodie, as that one is flat. Amazon and Google do use their own chips, but again, they are buying lots and lots of NVIDIA GPUs for their cloud computing. They are training some of their own models on their chips, and they're helping some of their enterprise clients like Anthropic train on their chips, on their custom ASICs. But for GCP and AWS, the AI workloads are running on Blackwell. That's why they are the highest spenders along with Microsoft on these NVIDIA GPUs. And it doesn't seem like that's slowing down. Microsoft, though, low of day at 479. I have no headline on Bloom Energy. I know that one's getting hit 7%. I have no headline on Nebius and no headline on Microsoft. Also, no headline on Uber. Why is Uber down 4%? Like, Uber just had amazing earnings. They said the consumer's fine. Like, I think a lot of these names are kind of being a little moody going into the JPAL meeting. But like, why the hell is Uber down? like in what world does Uber deserve to be down 4% right now? I guess, okay, so you had Citizens come out, investment firm. They said, we see some risk from autonomous vehicles. I mean, that narrative is just old at this point. Like, if you really think robotaxis are going to kill Uber, then you sell Uber. But like, it hasn't killed Uber yet. Maybe it does in the future. But it's not been in the numbers for the past 4 years. So I don't know why we would expect that to continue. But no price target. They're just concerned about AVs. Rate cut gets announced at 2 p.m. 2 p.m. Eastern. We will know if we get this rate cut. S&P, low of the day as well, 681.90. 681.90. Mercado Libre also down 5%. Iren is down as well. Laura said, I sold my mom's Mercedes at 13. That is crazy. You guys have some wild driving stories. Like, wild. 13 years old, stealing your parents' cars. Again, I was afraid of driving, so I never had that issue. But I don't know at 13 if I would have got behind the wheel. TSM, is that down today? Yeah, the market, yeah, I mean, for those that are saying the market's nervous, yeah, I mean, definitely. TSM actually up a little bit. Can't deny the market's probably a little scared right here going into a hawkish cut. I mean, look, if JPAL comes out and says, hey, we cut, but we're going to be signaling a pause in the future, then the problem is I wonder if the market's like, hey, we're willing to give the S&P 500 a premium, which I think is trading at like 25 times right now. But to get to that 7,000, it's got to trade at like 27 times, 26.9 times, something like that. We're not willing to give it that much of a premium if we don't see more easing in the next like 4 or 5 months, which is what JPAL might end up like. I mean, the last cut was pretty hawkish too. He got up there and he said, don't expect a December cut. He was like being very explicit about that terminology. And all of us were like, bro, like, why are you like, all right, we get it. Like, we'll deal with that when we deal with it. But why are you signaling it right now? And that was his way of saying, hey, like, don't get too happy. If the same thing happens here, then I don't know. I don't know if the markets are going to be okay with navigating it. But on the opposite side, if everyone's bearish there, then maybe that gets you a little bit more bullish. We have an update right here. The Sandbox CEO is about NVIDIA AI chips to China. Let's get his perspective on this and see what he thinks. They also partnered with the Pentagon today, which is why they're live.
In fact, the founder of DeepSeek was one of the big winners and investors in that company. There's an ecosystem there that is now betting on domestic Chinese chip firms such as Huawei, More Threads, Cambricon, and others to win in that game. So we want to also make sure that we in the U.S. with our firms like NVIDIA and others have a level playing field to access all markets around the world. So there's definitely a balance there. But coming back to China on another front, one of the areas that the Pentagon is very concerned about is the quantum attack from China as well. So we have the AI attack using Gen AI as a vector for infiltration into U.S. companies and into sensitive areas of the Pentagon. We need to protect against that. That's what we're doing now with ActiveGuard. And we also need to protect against the upcoming quantum attack. The Q-Day is coming up in the next number of years, and that's the day that Chinese quantum computers can start to deconstruct and get into RSA and other encrypted material.
Wow. You got a quantum argument around why the US needs to be a lot more sophisticated when it comes to dealing with the threat of quantum.
RSA is what the Pentagon and all US companies use to encrypt material, to transmit confidential information across the internet. This goes down with the advent of and rise of scaled quantum computers. So 2 attacks, AI and differently quantum as well.
Right. Jack, over the weekend, it was Saxo Bank that had their list of 2026, they call them outrageous predictions, but one of them was that Q-Day would arrive next year. Bank accounts, they write, emails, digital wallets are no longer encrypted, which leads to the collapse of Bitcoin, unquote. Is that too early?
Well, they put it in their claims, and I know that, but Q-Day is definitely coming. Is it coming next year? Probably not. I wouldn't agree with that timing, but is it coming in the next few years? Yes. It is clear. The Chinese have made it clear. They're not hiding it, Carl. It is in their plans, and they make very clear milestone developments and accomplishments towards Q-Day. They have a very, very strong program under Pan Zhangwei, a very well-known physicist. They have more than 1,000 people working on this issue, on this Manhattan project, to create a quantum computer that cracks the cybersecurity that we all use every single day. When you're on WhatsApp, Carl, and it says encrypted end-to-end, that encryption is the one that will go down. Not to mention the SWIFT system, not to mention the banking system, the telco system, the electric grid, and of course, back to the Pentagon, our story today, protecting the Pentagon against those quantum attacks. So I appreciate the Saxo Bank putting it out there, but it's coming up very soon. And here's the point, Carl, here's the serious point, that it takes a while to transfer to the new cybersecurity that protects against quantum attack. The Pentagon, to its credit, has been now working on this issue, and now just in the last month has now adopted ActiveGuard, our software, which protects it against this. But we now need the hundreds of large companies and SMBs to also move to the new post-quantum standards that were issued by NIST.
I mean, look, that argument that he just said in and of itself is part of the reason why the quantum names have been holding on to a lot of their momentum. I mean, just the chance that what he's saying is correct, even if the probability is low, means that the quantum stocks are going to catch a bid, and that the quantum stocks are likely going to be more important than not. Quite interesting, though, making that argument, especially in the context of China. His concern is not even about the Blackwell chips. His concern is more about China quantum and the investments they're making there affecting the United States. Carvana, right, they're up 1.2%. Nvidia still down, now officially low of day, 1% at 183, as that one continues to go red. All right, folks, let's bring someone on to the show today. Some of you guys have heard the Twitter Spaces I did with him, I think about 7 months ago. I was on there with Ileano and Chad, and we're going to get into a lot of stuff today. Again, the big headline from yesterday, for those that missed it, the U.S. Navy has announced a $448 million 2-year deal with Palantir in an investment in the shipbuilding operating system, ShipOS. ShipOS will leverage Palantir software to bring modern best practices to the complex, data-heavy environment of Navy shipbuilding. Let's bring on the head of energy and natural resources at Palantir, Mr. Matt Babin. Matt, thanks for being on.
Hey, great to see you again.
So it has been a while since we talked. I think it was 7 months ago, around that March, April time. A lot has changed for Palantir. First of all, congratulations on all the success of the company. Before we get into the ShipOS deal that was announced yesterday, generally, just what has the last 7 months been like for you as you've been navigating the energy part of Palantir's business?
It's been busy, and I'd say I've been splitting time between that work and the Navy work, and really spending more and more time on the Navy work recently and moving forward. They're more similar than you'd think. They're both very highly regulated areas, right? There's a lot of subsafe certification is incredibly complex. Each submarine, a submarine takes, tens of millions of labor hours. An aircraft carrier has 1 billion parts that go into it. So 20,000 feet underground and complex environments where things have to work is very similar to, here's a submersible that's 2 football fields long, and it needs to be built faster, but with not compromising anything on safety, and it needs to work then for 50 years. So that they're actually similar in a strange way.
So let's get into Ship OS. Now, I think my audience and anyone who's really followed Palantir over the past couple of years understands that shipbuilding is something the company has cared about for a long time. The Hyundai Heavy Industries deal was basically executing on this future of shipyard vision in South Korea. It seems like that's now coming to the Navy. So I guess what was the part that led to this deal? And I guess why do you think the Navy ended up picking Palantir to implement Ship OS?
Yeah, so we've been doing this work for the last few months under some proof of concepts with a private shipbuilder, with a public shipyard, with just under 10 suppliers. And I think you're right to call out it's a similar workflow to some of the Hyundai work. The Navy has gone and seen some of that work. It's a big world, but it's a small community that builds ships of this sort of size and complexity. And if you look at the infrastructure of the supply chain of things like submarines or other large things like this, it does look, again, I'll just draw on the energy analogy because we've talked about that a lot before. The work with BP sort of started with this vision that Mr. Dudley had of, I want to chase a molecule from the sand face all the way through to the export terminal or where I monetize this. And that pulls in a reservoir model, that pulls in the way I operate my drilling campaigns, the way I operate my wells, my offshore assets, my midstream and transportation, my refineries, my commercial fuels and marketing. And if you look at sort of all of the steps that go into building a submarine, right? I have a supply chain of thousands of different companies spread all around the country. All of them make different parts and pieces. Those pieces come into construction by other suppliers. Those pieces then come into a module. Those modules turn into super modules, and those super modules turn into the boat. And so this idea of, I want to be able to securely share data up and down that chain, all the way up to the Navy, that looks a lot like Maven on sort of individual commanders up to COCOMs, up to the department. This idea of, I need to be able to flexibly solve a diverse set of problems across that supply chain. Individual suppliers have different bottlenecks, right? These are different companies of different sizes that do different things. And so I think what was attractive in the pilot work we did and sort of the proof of value was time to target. How quickly can you show value of the software? The flexibility of the workflow application. So what is the actual problem we're solving for an individual human who's oftentimes on the floor, not in an office? And then how do you match that flexibility with a canonical underlying data model so that the Navy can actually look at the thing they care about, which is the boat going to get delivered faster or not?
I think what's really exciting about this is that we've seen Palantir take over a variety of industries and become like a de facto operating system. And as you're mentioning, you have vendors, you have distributors, you have suppliers, you have sub-suppliers, you have a lot of these different things that need to be interconnected with each other in order to make it actually work at the end of the day, not to mention the complexity of managing a submarine. Is that how you're seeing the future of Ship OS? Is it just going to become a de facto operating system that you think can be the basis for how the United States Navy operates in the process of shipbuilding?
I think it could, and I think the sort of openness and extensibility of the platform is a valuable thing here too, right? I mean, if again, just use Maven Smart System as the analogy, Maven was built originally with the idea of, you're going to plug in detection models that we do not build and that we may never see, right? And so if you look at lots of other pieces of building a complicated piece of, deployment infrastructure, let's call it like a submarine, there are parts of that we will never build models or systems for. There's other scheduling software, there's other modeling software, there's radiographic testing, and the ability for the Navy to then use this as an orchestration layer, the way we see other companies and other institutions doing that, I think is something that I'm excited about building moving forward.
You talked a little bit about the complexities of working with the U.S. Navy and getting this done. I think last time we talked, BP had just signed their extension. Navigating a large-scale partnership with a very large organization that is managing massive levels of confidential data. How has that process been like to actually get the Navy to give you guys the trust to be able to ultimately implement an entire operating system?
Yeah, it's a good question. Again, I think, I've been here a while. When I joined, we only had a government business. So we really did sort of cut our teeth on building a platform that could securely hold classified data. And then all along the way, we've gone to, okay, well, what does it take to then get an IL6 certification to be able to do that in the cloud, right? What does that look like on FedRAMP for other people to be able to build software that they can deploy into secure spaces? The Navy's version of this that's relevant for submarines is NNPI, right? There's public information about this out there on, naval nuclear propulsion information. And so similar to other work, we've had to prove how the platform can hold data there, how we can enforce that on everything along the way. Again, like everything else, and this, I know, but the data remains the property of the data owner, right? And so what we're doing is sort of enforcing the regulations the Navy has set on the way data can be shared from Navy requirements down to suppliers who build those pieces, and from those suppliers back up to the Navy, including data that's sensitive.
I'm sure there's an answer to this. It might be a general answer, a more specific answer, but AI, everyone's wondering about how that is intercorrelated with all this stuff. Is this just AI as a workflow, as a sort of enterprise workflow gets automated in a very specific use case for shipbuilding as an operating system?
Yeah, what we've started doing, I mean, the work over the past few months with the pilot is really, what came through to me was a lot of these suppliers are relatively, I'm going to say they're small in comparison to the Navy, right? I mean, you're talking about a couple hundred employees. They're all over the place, and they're really, really good at what they do, right? Like these are companies that have done the same thing for decades, and they are craftsmen and women of the highest order of doing like really, really hard work in places that are 120 degrees in the summer and freezing cold in the winter, because the bays have to be open for, circulation and all of this stuff. And what you see in a lot of places is that the people who are best at the technical parts of that job also know the most about their company. That's not unique to shipbuilding and manufacturing, that you see that everywhere, right? But if you pull your best welder off a line to build a schedule, and the way they have to build that schedule is manual based on paper work orders and what they call travelers, and then an adjustment of who shows up for work that day or who doesn't, that's all time that person isn't welding. If you can automate that schedule building process so that welder doesn't have to build a schedule, and they can just verify, yes, that schedule makes sense. That schedule makes sense on the requirements I have from the Navy. That schedule makes sense in terms of this work is very high complexity and can only be done by these two people. It makes sense in terms of I'm not slotting two things at the same fixture, the same physical space in my facility, right? So what we really saw in the pilot was AI and automation for all of these things that take your high value, high skill workers off the line of doing the jobs they want to do and give them more time back to do that. And that's where I think you see in the Navy press release some of the sort of, taking 160 hours down to 10 minutes. That gives you then, 4 work days to bend metal instead of look for data and go do things.
Right.
And so the first application of AI in this has been, how do we automate these parts of the job that no one really wants to do and have gotten bigger and bigger and bigger over time because of the sort of proliferation of different systems and different processes and regulations. So let's still get all of the data from those places. Let's still do that work, but let's actually build, rather than a human taking dozens of hours to build a manual schedule, let's automatically build 8 schedules and have that human evaluate which one makes the most sense today, lock that in, and then get to work welding again. Beyond that, then I think we're going to see a lot more of how do you coordinate between those different nodes, right? So you start with sort of at each chain, at each part of the chain, how that makes sense. But then, if you make pieces that come to me, I want to know if you're changing your schedule. so that I can prepare for the pieces you're going to send to me, and then the ship builder knows what they're going to get from me at what schedule.
I love it. Matt Babin, thank you for joining the show. I'm putting Matt's Twitter in the chat if anyone wants to follow him there. And you can follow him on X. Last question for you, Matt. Again, thank you for taking the time to do this. I got to ask this because my audience loves when I ask this question at the end of every show. Super random, but it'll humanize you a little bit for everybody. What's your favorite movie?
Oh, I'll say favorite holiday movie because it's in my head. Is Home Alone. I think Home Alone is an excellent. One.
Okay, I'm a two guy. I like two. All right. I like
yeah.
And has that been like a child nostalgic type of movie for you?
It is, and I think then as you grow up as a parent, it takes on a whole different meaning.
Yeah. All right. I love it. Matthew, thank you so much for being on the show. And
Great to see you again.
Later.
Thanks.
Bye-bye. All right. Home Alone. Dude, Home Alone 2 legit is, I was talking about this, I think 2 weeks ago. That is like, I think objectively a top 5 Christmas movie. So yeah, I'm a Home Alone 2 guy. Home Alone 1 is legit, but Home Alone 2. Dude, Home Alone 2 is New York. Amit has never watched one. What are you talking about? Of course I've seen Home Alone. Home Alone 2 is one of the first movies I think I saw as a kid while the S&P goes red. And Nvidia, new low of the day. Why do they hate Nvidia? Nvidia is the reason for all of this momentum in the past 3 years. Freaking beat earnings by 60%. They can't let her win. Goodness gracious. Once again, red. Amit will watch it tonight. You guys are funny. But Home Alone 2 is, I think, an objectively amazing Christmas movie. Wow, Netflix. When's the last time it got to these lows? 94.78. Last, 6-month low. Is this a 6-month low? This is, last time we got here was April 2025. We are approaching Liberation Day. Liberation Day, it bottomed at 82, so we're not fully there yet. Goodness, April prices on freaking Netflix. Nebius right there, down 2.9. Meta goes down 1.2. Microsoft down almost 3. Uber down 5. S&P goes red. Hoodie's probably getting hit. Hoodie, yep, that's down 0.5%. And then Palantir, that's holding up at 184. Why do they hate NVIDIA? I don't get it. Call Vlad, tell him to take the sell button off of NVIDIA. I got rid of all my short calls on NVIDIA, by the way. I tweeted about this on Monday. I have no more short calls on NVIDIA, no covered calls. At 174, ironically, on the day I was driving to the dentist, there was like some traffic, and I literally I bought all of them back. Like it was a very like spontaneous decision, but I was like, dude, if NVIDIA is at this level and these calls have generated enough theta decay, because I rolled them out back in like freaking July, August, and the stock is down from those levels, like, and I'm getting a little bit of a profit on buying back these calls, like I'll leave these shares naked and let this thing run. And I mean, we got to run from 170 to 185, but the question is, can we get a run back up to 200? And we're going to have to see. 182.75, that's down 1.2%. Isn't this the fake move before the FOMC? Yes, technically that's true. Honestly, when Jay Powell's talking, all of that's going to be fake. And I know we're going to get super excited if we're pumping. I'll be super excited as well, but like, it's not real. And if we're dumping, we just have to remember it's not real. 3:30 to 4 p.m., those final 30 minutes is when we see how the market's actually thinking about it. 10 years down a little bit, so that's good, at least if the market's down. And again, I'm being hyperbolic on NVIDIA right here, but realistically, when Jay Powell talks, we're going to know what ends up playing out. All right, I guess we are red heading into the FOMC. Now, I actually like that, and I'm sure other people like that more than ripping green, because that's just setting us up for disappointment. So I'll be back in 2 hours, 2:20 p.m. Eastern. I'll be live. 2 p.m. We'll get the decision. Most likely will be a cut. If we don't, you'll know about it. You won't even have to check my Twitter. You'll see the portfolio react pretty quickly. But at 2:30, we're going to officially know what ends up happening. And we'll keep going from there. Could you please buy VG here? Dude, I really just, if I buy this thing, it's literally just trusting Chris and Matt. I don't know enough about this. I know the one thing I know, I've heard them speak about it, is that their free cash flow in like 5 to 10 years is going to be ridiculous, which they're probably right about, especially Matt, because he understands oil and gas really well. And he's like super bullish on it. But, you know, I would need to separate a little bit of money and just buy it and not look at it. If I buy a name like that I genuinely have a long-term horizon on, and I'm not looking at the day-to-day, like I really like this Robinhood individual account thing. Like I'm going to do that next year with Bitcoin and the S&P. I'm going to try to put some money into them and just leave them in individual accounts. So I'm not even tempted to sell them when they're stuck, because more often than not, those stocks, those indices will stay stuck. But the goal of it is not to, you know, see an immediate move. So maybe VG's on those. I'm still working on my 2026 portfolio update. I have like 4 different articles that I'm working on right now. Getting sick over the weekend it was supposed to have a deep dive come out over the weekend. I was supposed to have my prediction markets article come out over the weekend. I tried writing a little bit on Saturday, and I couldn't even stare at a screen and type. So if I didn't get sick, you would have had like 4 or 5 articles come out by Monday or Tuesday. So I'm going to try to get those out this week. But 2026 portfolio and how I'm thinking of like the moonshots versus the cornerstones of the portfolio versus like positions where you kind of buy 500 shares and see what happens, and you attach conditions where you take your loss if it goes here, or you double down if it goes here. I'm working on a really big article on that. So you guys already know a lot of my thoughts. I mean, Meta, Amazon, Nvidia, I think are probably your best Mag 7 longs, but I have some other names that I'm kind of looking at into 2026, and that'll all be on the article as well. All right, that is it. So let's do word of the day. We'll be back in 2 hours. All of us will be obsessively focused on a man and what he has to say about interest rates, which none of our friends or family care about, but we do. And it'll be fun because we're going to be reacting dramatically either way. Talk about this word of the day. This better not be a sign, ChatGPT. Drawdown, a decline from peak in your portfolio or strategy, the pain you measure to understand risk. Your prediction market strategy looks strong, but one big drawdown will reveal whether the rules actually hold under pressure. Goodness, bro. I mean, prediction markets yesterday. Did you guys see that video of the guy who was literally live streaming himself when Trump was speaking? And his strategy on the prediction markets was betting on Bitcoin, tariff. He was putting like $1,000 on every word. He knew some of these words Trump wouldn't say, but the ones that he did say, he would make like $700-800 on top of that. I don't know if I saved the video. If I didn't, I'll show it on the market close. But this guy was like literally going crazy after every word Trump would say based on the prediction markets. I don't know. ChatGPT better not be signaling freaking drawdown. It would suck, dude. It would suck going into the end of the year because we just escaped the nastiness of freaking November. And we got through it. I mean, I was talking about this yesterday with Jason. From the lows of November, my portfolio's up like 35%. Now, granted, it was down a lot as well. So that's why there's a massive move up. But like, you know, we were down a lot. We ended up getting somewhat of a decent recovery. Stocks haven't gone to their all-time highs, but, you know, Robinhood's not at 100. Palantir's not at 140 anymore. Nvidia's not, you know, stuck at 170. So Meta's not at 585. So having that reverse would be annoying. But again, the reason I don't think it's going to reverse is because if the Fed is easing, you've already got that intrinsically baked in. And then this AI trade, you know, the AI bubble stuff is there, but it's definitely calmed down a bit over the past couple of weeks. Question is if that narrative heats up. And if that narrative heats up again and we still have good earnings, it becomes a buy the dip. The problem is if people are levered and they have, you know, margin, they might not be able to buy the dip, which is exactly what happened in November. So that's what we're going to have to see for these rate cuts in the next couple hours. All right, I'll be live in 2 hours. 90% of you think we're going to get a cut. I agree as well. Question now is it priced in? And the fun of investing is we don't know. And we'll find out in 2 hours. All right. Thank you, everybody. I'll be back at 2:20 p.m. I'll be live on Twitter Spaces at 12:30 with Stock Talk. And so we'll do a Twitter Spaces from 12:30 to 1. And then at 2:20, I'll be live. 2 p.m., we'll get the decision. And then at 2:30, we will see what J-Powell says. Thank you, everybody, for being here. I'll see you guys in a few hours. Bye, everyone. Have a good one.